How you doing?
Doing good, buddy. How are you?
Little worn out, but we push on. We push on. That's what we do. So, uh, I guess what's the news on gold and silver? It seems like we got a little bit of waiting, and we will find out. But it doesn't look the best. What do you think? Well, not that it doesn't look the best, but there's we're moving down a little bit low, and it could go a little bit lower, but especially silver.
Yeah, I think we've got some intermittent weakness here that's aligning with the broad market weakness that we're seeing. It does look like the end of the bear market is closer than it is further away. I'm not sure that the macro backdrop is going to support much higher prices. There's some really interesting data that's coming out right now. Zero Hedge had alluded to some historical technical pivots. So there's two of them. Both of them have a 100% historical accuracy. One of them says that once you retrace 50% on the fib from the top of the sell-off, right, from peak to trough, then that eliminates the likelihood that the bear market is going to go any lower. You're unlikely to set new lows. And I'm seeing a lot of people pass this around, but there's also another 100% accurate barometer out there that says that we're not even close to being over. I think it's possible that both of these things could coexist at the same time. I don't see why we can't go all the way back down to at least 3,600, and that would make rational sense to me. Especially right now. I mean, the Fed is winning the narrative on the interest rates. The 10-year is rising rather quickly. So you can see that the market is pricing in for higher rates down the pike. And so as long as this narrative persists, it's going to start becoming more and more risk off in the markets. Now, in terms of gold and silver, I don't think that's a long-term problem. I think that, in fact, it could be quite bullish in the medium to long term, because typically once you start a real secular bear market, a real one that really starts to drag on, that's when gold and silver will separate themselves. And so you may see some of this initial selling as rates go up, or the threat of rates going up. You can see the macro fears building up. You open up the Drudge Report right now, they're talking about nuclear fears in Russia. And there's a lot of fear porn out there, and there are some real problems too. But it stands to reason to me that we have the right ingredients in the cake right now to start rolling back over. And so, yeah, I do think that we got our nice rally on these pivot points, but we're going to come back and at least retest them. I don't think that that's a bad thing, especially if you're being opportunistic. I think the technicals look really good. So, yeah, we're going to start selling off with the broad market here. But technically speaking, I'm not so sure that we set a new low in the metals, in the miners, in the equities. I think that we may retest. It'll be very interesting next week to see the price action, and broadly in the broad markets, and of course to hear what Powell has to say at Jackson Hole, and see the response in the gold and silver space. You never know what he's going to say. And it's hard to expect any real surprises. I mean, we've been doing this for months and months and months. Every time Powell talks, we listen to the same crap over and over and over. So, unless he really slips up and says something surprising, which is possible, I'm not sure that there's going to be a whole lot of new data coming out of there. He's going to talk his game. Remember that the Fed, their best weapon is their mouthpiece, right? And it's the threat of what they can do more so than what they can actually do. I'm still in the camp. It just makes mathematical rational sense to me that the Fed is mathematically limited to how high they can raise rates due to the debt ceiling that we have because of all of our debt. The interest payments on this debt, it just makes it too difficult to take rates too high. And this is why, it's very interesting. If anyone listened to the interview that we had with Keith Weiner, is very good. He had a lot of really good stuff in there. And some of what he chimed in on was that a lot of this inflation is more supply side than people appreciate. And it's supply side because of policy errors and mistakes, whether it's the COVID lockdowns, which caused a lot of problems. And of course, our proxy war with Russia over here, cutting off vast amounts of supply from the entire globe, for whether it's oil and natural gas or zinc and all kinds of things that come from over there, fertilizer and potash and wheat. And, we're getting cut off here. I mean, if you even look at the inflation numbers, we had a quote unquote cooling decline in inflation, but, food continue to ramp up higher. And there's no sign in sight that that's going to ramp off for us anytime soon. In fact, all indicators suggest that there's more pain to come in terms of food prices and inflation. I think inflation's here to stay. I think inflation's going to get worse. If you look historically at any time that a nation experienced inflation, it would ebb and flow. It comes and goes, but it's much more like a disease than anything. It's very hard to get rid of. It's systemic, and once you have it, it's tough. It's really tough. This is why everyone, always alludes to Volcker, how good of a job he did to quell inflation, but he did so by taking extraordinary means. I mean, he took interest rates over 20%, and of course, the difference today is, like we had alluded to already, the debt. We can't do that. We can't make the interest payments on our debt if we take rates that high. And so the Fed is stuck on what they can do. So for right now, I think in terms of gold and silver, we're riding this narrative train, and it's going to persist, and we can navigate the markets when we see these inflection points coming. I think, we can identify potential tops and potential bottoms and pivots and rebounds, and we can work our way through this thing. But all along the way, I'm still very highly in favor of accumulating throughout this entire process. I think fundamentally, there's really not a whole lot of space for gold or silver to go rather than up. Everything is there, everything is in place, and I'm very bullish on the sector, perhaps more than anything else. Even energy, despite how big of a problem energy is becoming, I still think the precious metals are going to experience quite the boom. And we've talked about on these spaces many times. We've alluded to the dollar milkshake theory and the way this is playing out, and this is still happening, and it's happening in spades. It's not slowing down, and these foreign sovereigns continue to print massive amounts of money, currency, to take care of themselves. I mean, the ECB is keeping Italy on life support here, and Germany is selling some of its bonds to buy theirs, and there's a whole lot of financial shenanigans going on to keep this system in place and float right now. And, I was thinking about changing the name of this space. For so long, we've been talking about the Fed pivot, and I'm not sure that that's even the most important thing anymore. I'm starting to think it's now time to pivot from the Fed. I think that there are bigger fish to fry now. It looks like the Fed's going to get away with it here in America, and it looks like our system's going to make it out. I mean, look at I'm looking at a chart right here. I mean, since the Fed started raising rates, the Dow is only down now 9%, the NASDAQ 21%, the S&P down 12%. It's had quite the rally. And I do think it's a bear market rally, but you would think for as many fundamental reasons as we know and understand and have just talked about in the past that we should be lower, and more would have broken by now. But a lot hasn't broken yet, right? There's still a lot of things to break. I mean, really all we've gotten is a few Ponzi's in Bitcoin, and I mean, these guys in Wall Street Bets and Cohen, and I mean, there's still shenanigans all over the place. It really makes you feel like things were a bit stronger than we had perceived. I mean, you could look at this a few ways, but what's interesting to me in my time and my experience being in the gold and silver space and understanding the financial system to the extent that I do, and the debt-based system that we have, and the whole historical precedent for the way these things all end. One thing I've learned that this stuff always drags out longer than you'd expect it to. It always drags out longer than you would think. This is a big engine, and it takes a lot to slow it down, which again, on the contrary, is part of why you can't let it stop. You can't let it slow down too much. It's too big to restart, but nonetheless, it's very big. It's a slow-moving, enormous macro piece, and this stuff takes longer than we can usually appreciate. And so I think fundamentally we're going to get to where we all expect, which is the end of this paradigm. I think on the macro stage, you see this all kind of playing out already. You know, we really started here with the lockdowns globally. We started it with a lot of authoritarian measures, and we have elevated now into proxy wars and the threatening of future wars, and we're poking every single bear that we can find. And you can see, you know, we've weaponized the dollar. It's not a coincidence that I try to ask people, some of the guests we've had, to kind of opine and share their opinions on whether or not the Fed and the government are weaponizing the dollar. And it's because that makes sense to me. I see this. You know, the answers that we've gotten from some of the guests so far is that they're too stupid to do that and they don't think that far ahead. But I actually kind of disagree on that. I do think that they know what they're doing, because you look at Jerome Powell. Look at the things he's been saying lately. He's been referencing guys like Arthur Burns. They're always talking about summoning your inner Volcker, right? These people know their own history better than anybody. They know the policies that worked and the ones that didn't. They know what they're doing. And I think everybody understands and appreciates the place we are in history. This is a pivotal moment when the United States as an empire is weakening and spreading out. We have a lot of systemic structural problems, but so does everyone else. And I think everybody recognizes the chess pieces on the board. And the thing about history and empires is that we know that they always roll over and they always fail and they always collapse, and then somebody comes in to take their place. I actually really firmly believe that the United States is trying to get prepared in situation to have a part two in their own empire. And I think that they're doing that using their strength, which is the military and the weaponization of the dollar, to set systems in place. So that collapse will happen somewhere else. It will not be because of them. This gives them the opportunity of narrative. Narrative drives the world. Narrative is substantially more important than fundamentals most of the time, at least until the very end, when reality inevitably, you know, wins, because it has to. The truth always comes out. The truth always wins in the end. But narrative and the ability to manufacture it and the ability to put it out there and to get people to believe it and to push it out, it's so powerful. And you know, if some dummy like me understands this, and I know that they understand this, and I think that they're using this to their advantage, I think that they're setting things up to kind of take a second shot of reestablishing their foothold once this all starts rolling over. And I think everyone's kind of teetering on a toothpick, waiting for the first domino to fall, and it's all a matter of when and where it's going to happen. But we all understand that it's on its way. You know, everybody in this room understands a lot more than the average person, right? And at the very least, you're here because you know something's wrong and you're looking for answers. This is almost intrinsic. We can feel the pressure out there in the world. We can feel these events unfolding before our eyes. And, you know, like I said, look at the front page of the Drudge Report: edge of disaster, worst case scenario, Russia, Ukraine spar over fighting near nuclear facility. I mean, it's back. And, you know, when they start pushing this stuff back out on you like this, the way they are, I just feel like something is coming. I feel like an event is well on its way, perhaps a black swan. This is pure speculation on my part. I have no evidence to prove this. This is just me rambling on a rant here. But I think I really feel something on its way. And I'm not sure how much longer we're even going to care about the Fed. I think the Fed is going to get its pivot, and it's not going to be on interest rates. It's going to be on an excuse, a narrative of change in the dynamic of the way the world's going right now. I just feel that happening. And we'll see how it plays out. But assuming all that aside, let's just get rid of all the speculation. The tangible things that we have right here in this country right now that we can look at and verify and touch. It's not a whole lot different. Things are still kind of bad here too, like we kind of talked about already. But for right now, the narrative is in favor of the Fed. They're winning. And as long as they're winning this game of chicken between the markets and the Fed, you know, we're facing some more downside here. Technically speaking, the chart has room to go up in these broad indices. It's really kind of an inflection point right now. I think we need another week or two, maybe 3, to know for sure. Unless we could just get a really substantial, nasty sell-off, that would be a pretty good indicator. But if you just look back historically on some of these moving average in the markets, once the broad indices lose the 50 on the weekly, whenever it comes back up, it at least takes a few weeks just kind of playing with it and flirting with it before it gets back up. And that's essentially where we are. So we may trade sideways, slightly down for a bit. This may give people, we might have to ride the roller coaster of emotion here for a bit. And neither bulls nor bears will get the signals they need to make confident, convicted decisions. A lot of people will get shaken around, lose some money here. It's just part of the cycle. And then we'll get a clear answer, likely on some major catalyst or news that drives the market in one direction or the other. But again, to reiterate for anybody who's just coming in, I'm pretty confident here that once the market appreciates and recognizes that we're entering into the secular bear, this is when gold and silver are really going to take off into a secular bull market, especially if there's any kind of a confluence with the Fed making a pivot on interest rates, whether it's a substantial reduction in the rate of pace or just pausing altogether. But I can assure you that as asset prices go down, so too do the tax receipts of the federal government, okay? And this includes your local, state, federal government, right? This is all across the board. These tax receipts are going to collapse as the cost to borrow the difference goes up, okay? And so this is unsustainable. Something's going to break, so I know that there's a ceiling on these hikes. I'm still not biting on them taking them as high as they say they are. I still stand by my call. We'll see if I end up eating crow here, but I still stand by it that if they do, in fact, raise rates in September, it will be the last one and it'll be 50 or less. And that's kind of what I'm looking at right now.
Well, that was an epic rant to start with. Goodness. So a lot of stuff to talk about. And, part of the dollar milkshake theory is, he put out a video where he kind of was talking about the different movie analogies, and one of them was about Highlander, the original one, the one from the 80s. And the bad guy was just eating and killing every Highlander out there, and you take their power whenever you cut their head off. And he was just the biggest, baddest guy in the room, and that's the dollar. It's just destroying them all. And at the end of the day, it's gold is the quiet, kind of peaceful guy, and that's who wins in the end. But it's doesn't make the most noise all throughout the movie. But it's really worth watching his. He did some really good speeches on it, and video analogies about there will be blood. He really ties it in where you can kind of the average person kind of understand it. And but I see we have Jim Hunter in the room too, so he does options. So if you want to speak up, give your thoughts. We'd love to hear from you also.
Hi, good evening, folks. I can be here till about 9 o'clock Eastern. I've got to go get my wife at the airport. We've had a kind of a rough week, it looks like, down 5 days in a row in both gold and silver. One thing I wanted to mention is that I did on Twitter this week, I did read Mr. Morgan re-emphasize the fact, somebody else brought it up, where the delta between the silver eagles and some of the other coins that folks are buying, even the delta with the premium on the resale of the eagles, people have increased their total silver. For example, let's say you have 5 rolls of silver eagles. That's 100 coins, 520 roll, little rolls. They're 20 coins.
Tubes, yeah.
And what the gentleman that I saw on Twitter did was he sold his eagles to a dealer, to a coin dealer, and let's say he got about $8 over spot. Not all dealers are offering that much, but he was able to take that with the delta between the buy price for the product he bought and the sell price that he got for the eagles, about approximately $8 over spot. He was able to increase his total ounces held. And Mr. Morgan reemphasized that too. He said that You can probably find it on Twitter if you go back and look at Silver Guru this week. It was probably on Thursday or so that I saw the post. So there are some things that folks can do if they're interested when the premiums are high on some of these products. One other thing that I'd like to mention, I'm a futures broker, futures and options on futures, that when we've come down this far, 5 days in a row, the gold settled at 5 o'clock on Friday. December is the contract that has the most, people are watching the most, $1,760. And the silver in the September, which will go into delivery in about 10 days, the silver finished just under $19 at $18.96. The settlement at 125 for silver was about a dime higher than that. It continued to fall in the aftermarket into the 5 o'clock hour. My point in saying all this is that what we've done for the last 5 days in a row is we've dropped in price. And for new people, either new people that are listening that are new to the gold and silver market, or people that dollar cost average, we've taken 5 days of price risk out of the market in the last 5 days by settling lower. And just to remind folks, the high in gold is about 2080, 2078, 2079, 2080. We're at 1760. That's $300 and change underneath that. And the high end silver, I don't even need to remind people, and twice. Call it $49.50. Call it $50. We're way less than half price on that at under $19 for futures. And I would just encourage people that are buying just to shop as much as they can and buy as many ounces as you can for your stash of dollars, meaning buy lower price premium things. If you want to buy Eagles or Maple Leafs, that's fine too. Go ahead.
Thanks, Jim. I appreciate that. I always enjoy your takes and your contributions. If you don't mind, I'd like to ask you a question. We got the commitment of traders report on Friday. Was there anything in there that really stands out to you? Anything worth reporting? I'm also seeing continual posts by big gold and silver names on Twitter, and they're always reporting about how much gold and silver are being withdrawn from the COMEX. Is there any kind of a historical precedent taking place here, or is it just noise?
Well, to talk about the deliveries first, I've mentioned to several of the people over the last months or so that people are taking delivery from the COMEX for one simple reason. It's the cheapest gold and the cheapest silver in America. There's no premiums by definition on futures. There are some costs involved with taking delivery. But if somebody's looking at Eagles, if they're $12 or $14 an ounce over the spot price, you can buy a futures contract. There is a mini futures contract that's a 1,000 ounce bar, but that's why people are taking delivery. And in the current month, the gold delivery is huge. It's like 32,000 contracts in this month that we're in currently that is being delivered, and the silver is way down from that. I think the silver deliveries month to date are maybe 1,000. I can look at it if people are interested. So that's my contention, is that people are wising up, that are coming to the space. There's people coming to the space with real dollars, witnessed by the fact that one prominent retail dealer out of Minneapolis, Minnesota, had a very good sale in gold and silver earlier in the month. And you're seeing people come to the markets, and deliveries are happening on the COMEX because the price is low relative to what you can buy from a coin dealer. In terms of the commitment of traders, I'd like to add that it's certainly worth watching. It's a tool to kind of get a gauge on what is happening. There has been a pretty significant repair up until the last couple of weeks in the commitment of traders, especially on silver. Repair meaning that a lot of the commercials that were short have been covering their shorts. But as far as last week and the week before, we had last week's commitment of traders reported yesterday on Friday. That goes through this previous Tuesday. The last couple of weeks, there was a little bit more commercial selling. So the commercial short, I believe, went up by a few contracts. And so I guess I would encourage people, if you're, want to analyze it, you can, use it as a tool. I'm not quite sure that it's the end all timing tool to, give you a reason to buy. But I will say that when the commercials are covering their shorts, you might look inside their head a little bit saying, why are they covering shorts? Well, they're covering shorts maybe because the move is possibly getting close to being over. The move meaning on the downside. Go ahead.
Yeah, that makes a lot of sense. And it's a very interesting what you had suggested there about basically arbitraging that delta and the premium there for more ounces, right? For more weight. Something I have to think about and consider. Part of my most precious treasure now are my Eagles and stuff because I got them so relatively cheap. I mean, the spot price on them was nothing, back then compared to today. So it almost feels like, I'm going to have to think about that because if things keep going the way they're going, the spot could actually go back up. But when you start thinking about it like that, then you're kind of trying to play the market. And, if you do it right now, it's a guaranteed win. So it's very enticing. I'm going to have to think about that.
Well, I'll give you an example, I guess, is that the Silver Eagles, when I was buying them, they went for years at like, let's say $2 to $4 over spot. For years, they did that. And now recently, they're $13, $14 over spot. And you can sell them in that example that I stated. You can sell them at least at that one retailer. You can choose. You can look online, do some calling if you want to. You can get $8 over spot. Well, if you can get $8 over spot and spot's $20, let's say, that's $28. You can actually increase, like I mentioned, you can increase your stash or increase your ounces. The Eagles sitting in your safe or at your storage, wherever you've got them stored, they're not multiplying. So this is one simple way to multiply your ounces. And someday when silver is, triple digits, you might be happy that you moved. If you've got lots and lots of Eagles, maybe you move a little bit of it. I like the Eagles myself as well, just because they're recognized. It's the most popular coin. So that was just my idea. I wanted to just bring it up.
So Jim, I'm kind of curious how long you've been trading in the market in general, and as far as the price being so high, the spot price being over. I mean, it's something that can't last, or you've seen it in the past, or just how long have you been in? How big of an anomaly is this?
Well, Alex, I'm 100 years old. If you feel that, I've been in it a long time. I'm not really 100, but I started my professional career in 1986. So I've been around. I've watched metals for most of my professional career. And it's amazing to me to be, my firm belief is that silver is undervalued under 25, and it's a downright steal under $20. So we've been in the year 2000, gold was cheap. You can look it up. It was like $220 or so. We fell after that between 2000 and 2003 by almost half, down to like 160 or so. And if you look at it now, we're over 10 times that. We're over $1,600 an ounce. That would be 10 times 160 since 2003. And silver twice has hit $50. 1980, when the Hunts were trying to somewhat corner the market. And then 2011, we hit just possibly below $50 in the futures for one afternoon. And it's been kind of downhill since then. I strongly believe that silver is the most undervalued just because it gets used up in anything from defense to energy, solar panels, that kind of thing. Now EVs and the batteries and the connections and the processors, microchips that are going in everything. And I really think that silver is where it's at. The other thing is that the mines right now aren't making a ton of dough. Maybe they're breaking even, maybe they're making a little bit. And that's not a recipe to increase supply. So I think the demand is increasing every year, the industrial demand. Certainly for the last year and a half, the silver people on Wall Street Silver have opened up a whole new tranche of buyers. And the big move will be, I think, when the institutions start coming back to maybe their normal allocation to metals, and maybe their normal allocation is 2% of assets under management. Maybe they double that. Maybe it goes to 4, even 5%. If things start moving, you'll really see the demand come alive at that time.
Yeah, it's great to hear. And, I think it's, for me, it's everything gold is, plus on top of it, it's unrecoverable. It still exists, but it's in, landfills and, dust everywhere. So you can't get it back at an economic price. So it's just everything gold plus, and, it has the industrial demand too. So I guess I'm going to keep bothering you, Jim, because, I just like to bother people. But I would say, what do you think about the different ways to buy it? I mean, how have things changed where you have more retailers now? Is it a lot easier, or is it just more transparency? And I'm guessing you're a coin collector as well, like longer term.
I really can't, talk on the number of retailers. There are people you can have on as a guest if you want to do that are from that business. I'm not, I don't have a license for that business, retail. I certainly have got my personal opinions. I can tell you about futures in terms of what's going on in futures. The futures, both gold and silver, have dropped. The open interest is the gauge, if you want to use that. There's volume and open interest both. The volume is still pretty good every day, but the open interest in gold contracts is under 500,000 open interest right now. And in silver, it's under 150,000 open interest. And that is relatively low for the amount of time, for what's normal. I think that'll increase both open interest and, the volume will go up as well too. But the open interest, there'll be more people involved as the price starts moving, from declining to increasing. And I think when gold takes out the highs, call it $2,100, I don't think the open interest is going to be under 500,000 open interest contracts. That just means that's the total number of contracts for the months that are trading right now that are open. Open means one buyer and one seller equals one futures contract. And that counts as one in the open interest. And right now there's under 500,000 total. And in silver, it's under 150,000. So I'm trying to answer your question, Alex. I would say that the interest in the metals right now, I think it's there, but it's certainly not, record open interest right now. It's below normal, I'd say.
Yeah, go ahead.
You can go ahead.
Yeah, so I follow and study people like Jordan Rory Byrne, and they have a lot of knowledge on historical analogs in the gold and silver space. And they like to point to open interest as a good thing when it's very low, because we tend to kind of bottom out when it gets low. So you're saying it's pretty low, but it's not kind of record low. I'm looking at the chart here. I don't know how much you look at technicals, Jim, but worst case scenario, I mean, $16 is kind of I'm kind of looking at $16 here. We got a lot of chop if we were to fall below $19 again, but maybe in a really bad case, we hit 16. Does that feel reasonable to you? Or you think that's just too low? It's about another 15%.
Yeah, I guess, Liberty, my point of view would be this way. This is how I would leave it for everybody listening, and I've mentioned this before, maybe not on your spaces, but my point of view is, if you talk risk reward in silver, let's say that there is 1 to 2, maybe $1 to $3 lower from here. But what's the upside? We know we can hit $30. We hit $50 twice. So let's say that it's 1 to 2, possibly $1 to $3 downside risk if you want to be long. And what's the upside potential? There's a prominent silver miner chief executive officer that is on record saying he thinks silver can hit triple digits. Well, triple digits means $100 plus. I'm not saying we're going to $100 plus anytime soon, but let's say we can go to $40 or $35. $35 is, call it 100% increase from here, from where we are. And so if you can talk about $1 to $2 lower risk and $10 to $12 to $15 upside, that's pretty good risk reward. That's how I tend to look at it, rather than going on record saying I think the low is going to be $16. I don't know where the low is going to be, but I don't think that there's a whole lot more than $1 to $2 downside, because we've dropped from $30.40 in the last year and a half.
Yeah, that makes sense. I agree with you.
Yeah, it feels like my kind of trade. So uranium, cranium. I see you're a speaker also. You made a small trade, I think, against it. I want to say you said you were short. So how long?
Not short, but I expect that the precious metals sector is going to heat up, and I'm my timing of it. I'm still waiting. Same, just being patient, hoping for sales, and my timing that I look for is, because I'm almost like a disciple of John Hussman, and so many people probably know that, although many people probably don't know John Hussman. But the two things that historically have indicated the markets to move in precious metals are world inflation, particularly in the U.S., coupled with decreasing long-term interest rates. So the combination of those two things, that intersection, is usually seen early in a recession. So we're getting close. That's, I'm tracking this very closely, and frankly, weighing my options of allocating to precious metals versus uranium, and things like that a lot of us have are also following closely, just because I this John Hussman does not know even probably wouldn't even know that Cameco is in the uranium space, but as as an asset manager and someone who allocates money towards precious metals at different times, in a very disciplined way, I trust, and almost in an unchanging way, or I don't want to say unchanging, that might be judgmental, but in a very disciplined way, a time-tested way, that is controlled and is very value oriented. This is what we look for, and it's coming. So my question for Jim is, do you have any thoughts to share on the precious metal mining sector vis-a-vis the physical? It sounds obviously like, if I get it, your space is less in equities and that sort of thing, but just if you have anything to share about that end of the space versus the physical.
Well, I will first of all say that I'm not licensed to talk about stocks. Okay. So I don't like to talk about stocks. I'll give you one personal opinion that might give you some sort of clue to what my understanding is. There's a group of metals producers, gold producers, that falls under the index GDX. Okay. And if people are familiar with that, if not, you can certainly look at it on your stock account, however you want to. It's my belief that GDX is terribly, terribly undervalued. And the reason I say GDX is more so than silver is the silver miners are barely making much money at the moment, but the gold miners, if their cost per ounce is $1,200 to $1,400, they're still making significant several $100s per ounce. And all gold has to do is go back to the highs, call it $2,100, and those profits multiply. So it would be my opinion, just to give you my own personal opinion, that GDX It's an index of gold producers. In my opinion, is severely undervalued. Hopefully, that's what you're looking for.
Yeah, no, I appreciate that. And then, do you have a sense, just because I understand you've tracked the space for such a long time? Do you have an opinion or a sense? And trust me, uh, I do not think of you as my fiduciary. I actually get annoyed that everybody, including people who are rank amateurs, that I, frankly would throw myself into the category. Somehow everybody on Twitter or on social media always has to like make a disclaimer that this is not financial advice. Like someone like yourself, I appreciate that, but why Twitter noobs do that, I have no idea, because you're really an idiot if you take Twitter noob advice and and put multiple $1 million to work with that. But being that you have been a professional in this space, do you think that I'm curious, do you have a perspective on how the silver miners have historically diversified into gold? Does that that trend, and that my understanding is that took a decade or two to that happened, but that basically everybody went that direction who used to be a pure play silver miner. Do you have a sense of or anything to share about that?
Well, if you stop and just think about it logically, there's profit in the gold mines right now. There is not profit in the silver mines. The gold to silver ratio, meaning it takes 86 ounces of silver to buy 1 ounce of gold. That tells you that the gold trade is a little bit more developed and more, I guess, preferential than the silver trade is right now. That doesn't mean that the opportunity in silver isn't more than it is in gold, which I think it is. But I think that the silver miners, the people that have gone and transferred into or acquired some gold mines, have done it out of necessity, just because the way I understand it, there's so few full time or 100% major silver miners that are in existence and fewer for sale. So there's probably more gold properties that some of these silver companies could acquire. And they report, when they do that, uranium is, they report in, I believe it's called SEO, silver equivalent ounces. So when the price is 86 to 1, you mine an ounce of gold and it counts as 86 ounces of silver that they mined. That one executive that I was talking about a short time ago, I believe he says that it comes out of the ground at 7 ounces of silver to 1 ounce of gold. So why should it be priced at 86 to 1 on the price? So if you kind of figure it that way, I think the opportunity is in silver, but I think the silver miners, when they're trying to acquire or expand, I think that just out of logistics, they can't find a silver, a major silver company to acquire, because those major companies or those major silver mining companies are being held by the current owners. They don't have them for sale.
Thank you. Yeah, and I would just share with the group that one company that is on my radar as almost flying a little bit below the radar as a pure silver play is, and I'm sure it's familiar to someone or someone's like Liberty and Alex, is Avino. Avino has silver assets in Mexico, and what's interesting about them is that their name is Avino Silver and Gold, and they're one of they're possibly the only major exchange listed precious metals miner that I know of that has actually gone the other direction. And I don't think it's by choice. I think that they depleted their gold resource, and they're still kind of, I think they intended to change their name, but for some reason they're just still hanging out as Avino Silver and Gold. But they've actually kind of, for better or worse, going the other direction. Yeah, that's all I got for now.
Great stuff. Austin, jump in here. You were about to say something.
Yeah.
It's like Jim's in my head here. Honestly, like everything he said was exactly how to answer those questions. Like, That's exactly right. That's why all these companies are diversifying to gold. It's not that they want to, it's they can't find the deposits. It's kind of like in the uranium space. So yeah, like there's a lot of uranium out there, but like it can only come online at $80, $90 uranium, or maybe a little bit lower, like, right? So that's kind of the same challenge in that. Like nobody, like these companies, they don't want to be gold companies, but they have to because it's coming out of the ground at 7-1, and they can't make money on it. But on these gold miners, like I'm really curious to see what you guys all think from just like a fundamental perspective. Like, I've been like, so I've historically spent most of my time focusing on the gold and silver mining space. I've been getting more into uranium with you all lately. I've been looking at the balance sheets again. Like these these gold companies, they're value companies today at today's prices. They don't need $5,000 gold and freaking Mad Max to start making money, right? Like, Barrick Gold, I know it's not everybody's favorite gold company out there, but they have a net cash position and they have about a 33% margin on every single ounce, right? If gold goes up just $200 and hits $2,000 an ounce, their profit margins are going to go up 66% on that. Like the leverage is already absolutely insane. Like I think these are value companies. I'm hoping we get a little bit of more sell off, but I'm about ready just to go to the gold space. Silver's tougher because yeah, a lot of these companies can go bust.
Austin, that GDX index that I referenced here a few moments ago, it's trading $25.25. That was the close yesterday. And it's my opinion, honestly, that can be $60. Well, that's almost 200%. So, I mean, it's a gold company, and the gold companies represented by the index are making money. So I think, you know, like I agree 100% with what you just said. They're value companies. It's a value play.
Like this money is gonna get returned to shareholders, right? So it makes it really, really interesting to me. And maybe they'll make the same mistakes. I don't know. But from how they've actually acted, like these companies are operating with supply discipline. Like they're operating like real fundamental companies, like Berkshire's, right? Like they're not going out and throwing money on mergers and acquisitions. They're not going out and doing huge exploration budgets. They've paid down their debt since 2008 when they got over their skis, and they're starting to return that money to shareholders, right? Like these companies, I think that people just like get the wrong idea that there's some just like, oh, if things get crazy and we get $3,000 gold, they're gonna make a lot of money. No, no. Like as long as the price of gold keeps up with inflation, these companies are screaming buys. Like think about Wheaton Precious Metals right now. They have a little bit higher silver exposure, but this company, last I looked, it's like down 41% from its high this year, while the gold price is only down 15%. What silver maybe down like 20% from its high, 26 from its high, something like that. Like Wheaton doesn't have operations besides 30 people in the actual like office, like looking for new properties, right? They have no cost.
Streamers, I love streamers.
Yeah, it's down 40. It's down 41%. It's nuts. Like this is one of the few companies that I would say that you can actually like value on operating cash flow, right? It's trading off like 15 times operating cash flow to enterprise value right now. Like I think like Wheaton, I'm waiting a little bit more to get back in, mostly out of greed, but I don't give a fuck what Jerome Powell does. That thing's a buy right here.
It is, you're right. And, there's some companies like PAAS, and, you talked about the streamers, but there are other fundamental reasons that some of the miners are selling off. I mean, their costs are going up, and PAAS is a good example of that, Pan American Silver. They had reduced revenues on 20% increased all-in sustaining costs, right? And now they're projected to meet the low end of their production targets. And so it's selling off for that reason. But the thing about it is that they're intentionally not going to reach those production targets because they don't want to sell their resources at current prices, right? Especially as the prices are falling. You see Keith Neumeyer do stuff like this a lot too. And so the market is giving you a substantial discount here. I talked about it in my latest video. $14 for PAAS is going to be a great buy. It's like, because the situation today that's giving you the great value, like you just talked about, is not going to exist tomorrow, right? These are extraordinarily oversold already, and you're getting some really rare opportunities in specific companies like this one to buy even cheaper. It's really incredible.
For those who don't know PAAS, you're referring to Pan American, right? Liberty.
Yep.
Just so you know, that's the major. Now it used to be silver, but again, diversified into gold and silver. For those who don't know, PAAS.
And I watched
Yeah,
you say
and
Liberty, and you really rained on my parade because I want to buy that thing so bad. But you kind of crushed my dreams on that one. I may have to be patient.
yeah, be a little bit more patient, man. I think we're going to get a little bit more selling in the near term, and that's a good thing because you get better buys. But just to cap on one more point of silver mines is that there really is almost no such thing as pure silver mine. It's almost always coupled with another metal. So it could be zinc or gold or lead or even copper. And so even by volume, these silver mines, the most voluminous metal is often not even silver. It's just the silver equivalent, like Jim had alluded to, is more valuable than the other metal it's mixed with. And so for these producers, especially, and the exploration company goes out and mixes big find, they say, well, what's it mixed with? Well, it's mixed with gold. I mean, that's a great opportunity, especially if you already, as a producer, you're looking to make an investment and expand your assets. Then you already have something you want in gold, and you already anticipate higher prices in it. And you typically get more gold out of the mix anyway than the silver. So that's part of it. You are selectively choosing gold over the zinc it might be with. But, copper is a good one for it to be mixed with too, right? You get a silver mine that's mixed with copper. I mean, that's a great potential asset to have too. So don't underestimate that.
And that's such a good point to why I think this entire thesis confuses and frustrates people. Because like, there's a saying in life that your greatest strength is like often your greatest weakness, right? That is 100% the case with silver. It's something like 67% of silver is a byproduct from everything you just said, zinc, copper, which means that there's no supply response when there's too much silver, right? Because nobody's going to mine less silver because they don't care about silver. They're a zinc mine, and sometimes they've even sold their silver production off to a wheat and precious metals because they really don't care. They just want a little extra capital to build their zinc mine, and they want to sell zinc. But if this actually works out, this green new dream makes all the demand for silver, for solar, and all this stuff just go crazy, and the industrial demand overrides the silver, there's also no supply response on the upside. So like, yeah, I think $100 silver is going to happen within a decade, but pick a number and I'll say it's possible. Sorry, motorcycle going by here, but there's no supply on the downside or upside. Supply response,
Yep.
sorry.
No, that's an excellent point. And so the co-metal, the metal that coexists with, is a great hedge. Just like you said, that is a great point.
And Liberty, I'll just add that for folks who are just learning the space or learning precious metal space a little deeper than just looking at the GDX or whatever the components of it and be like, oh, okay, these guys have this market cap and this market cap. It's kind of like with when we're working in uranium, and it's kind of understanding how many pounds that a deposit might have, and and the taxes and all these other kind of more granular things. One of the things that I, as a someone learning the precious metals sector a little bit deeper now, I'm starting to get an eye for the, at least with producers, the number of ounces that they produce per annum, and how that stacks up to against other producers. If it's 24,000 and heading up to 36, or some of them are a 500,000, or all but 1 million, and so it's just kind of I think it's a hallmark of developing precious metal investors that you start to get a little bit of a fluency in terms of like, oh, I have a sense, a range in my mind of what these producers are capable of. And the reason why that's important to me is because in my mind, I'm also doing the same analysis with precious metals plays that we're doing in the uranium space with and I see Chapman is here. Chapman has a position in uranium that I agree with, that kind of emphasizes that in a higher capital cost environment. And Chapman, by all means, if I'm not capturing this correctly, correct me, but in a higher capital cost environment, and potentially a weak macro environment, if that comes to pass, you do need to think about allocating more weight towards producers and folks who are actually going to convert on the higher cost, the higher realized prices of the underlying commodity, at the expense perhaps of explorers and developers per se. So in that way, I've been kind of bringing that over to precious metals, and it would very much be interested in getting your thoughts on that. Liberty, Alex, Jim, anybody, Austin, if you've had the same thought, or this is just not a surprise, that this is this something, how you're doing it.
Yes. So the gold and silver space is factoring this in, and some of my equities that I hold have already been hit by it. I'm a big fan of Liberty Gold as a project, and it's one that I watch closely and look to add to. But part of its problem is the extra costs being incurred to get these mines going. And so it's already having an impact. You're already getting the discounts built into the share prices because of these added costs. So absolutely, it matters. You're exactly right to bring it up. It is a big deal. It is important. These costs are probably going to continue to go up for the foreseeable future, right? I'm in the camp that we have much higher oil prices ahead of us. This is in part because I know they're going to print $1 bajillion to keep everything going, and we're not going to go through some kind of depression. We'll have financial difficulties and troubles and structural problems, but I don't think we're going to live through a depression. But they're going to keep this stuff pumped. I don't see the geopolitical situation getting any better. So anyway, suffices to say that I think higher prices are here to stay for a plethora of reasons, right? And so, yes, this absolutely should be factored in on a case-by-case basis. I think that's what makes some of these plays that I've looking at, like we've talked about before, like Minera. Minera has already got its first mine going. The second is permitted. So it's over a lot of these obstacles already. This is part of what makes it so enticing, right? It's because these factors are not going to hurt it as much, and it has a great resource. Tentatively to produce 250,000 gold ounces per year. That's very nice. And you're talking about a market cap right now of 161 million US. So there are plenty of great deals out there like that. You're talking easy 10, potentially 20 bagger shots here, assuming nothing happens geopolitically, assuming their government doesn't crack down on them. There's always risk. I mean, this is in Mexico. Stuff like that, all things being equal, there are a lot of great projects out there with a lot of upside that we can target. And we don't necessarily have to step on landmines due to the issues you're bringing up, which are entirely valid.
Oh, 100%. I guess like all these things, it depends on what you want. Like, it's not going to be a 10 bagger, but if you're worried about oil prices going forward, which I would agree with a lot of these miners, you should be. But there's a stock for that. It's called Franco-Nevada. It's like 22% of the revenues come from U.S. and Canadian-based oil and gas projects. Like there's something for everybody in the gold space. Like Franco-Nevada, if I had to put my money in one stock for 10 years, I think I'd choose that one, honestly.
Yeah,
that's a good one.
And for me, streamers, they have everything locked in. So, you have a lower price locked in, and they don't have a lot of employees. They just sit there and collect the money whenever somebody needs money. They lend it out, and they buy the streams. So they're diversified and low overhead, and the oil price doesn't matter as much. To them. And the one thing that kind of surprised me when Don Durrett was on is he said, what happens if something starts going up a lot higher is you might have some of these agreements that they made are going to look really silly. So they might, start reneging on some of these agreements. So Jim, go ahead. And I'm going to try to get Jabroni on here too.
I'd like to, I'm going to have to leave shortly, but I'd like to offer one macroeconomic potential here. I read probably Wednesday or Thursday on Twitter and I should have retweeted it. I didn't. If I retweeted it, then I could give you the source. I don't recall the author of the tweet, but the premise was that they were thinking China and Russia together holding down 40,000 tons of gold. That, by comparison, the U.S. has 8,133 tons of gold. Well, why are Russia and China accumulating gold? It could possibly be because they don't want to do business with the U.S., or if they want to do business with the U.S., they want to do it in a more favorable term. And the more favorable term would be not U.S. dollars, folks. And if they've got enough gold at some point, maybe it's a simple transaction to back their currency somewhat by gold. Mr. Rickards thinks that your currency should be backed at least 40% by gold. Well, if China and Russia did some sort of joint venture or something like that, came up with a common currency between the two, I'm not saying that that's going to do, I'm not forecasting that. I'm just saying that if you think about it, it's a geopolitical risk. It's a macroeconomic factor that you can hedge against, and you can hedge against it. It's a hedge against the dollar by buying precious metals, either precious metals or producers of precious metals. So I just wanted to bring that to the Spaces audience, that I read China and Russia, possibility of 40,000 tons of gold. It's a lot of gold. It's 5 times more than the U.S. has together.
That's substantial. Well, just to put it into perspective for you, I'm about to nest a resource here so you can see how much gold everyone has. But, you can combine second, third, and fourth and barely match the United States. But you can match, let's see, from about the 8th highest holding all the way through the 20th. Still doesn't add up to how much the United States has. It drops off very, very fast in holdings. So 40,000 tons is...
But Liberty, does it make a little sense that if they're doing that, it's a way for you and for Alex and for, Austin, for all of us, it's a way for us to hedge that potential risk. And the risk would be that the dollar falls out of favor. And it could happen once there's an announcement. It's possible it could happen in months.
That's why you can't buy it in an ETF, in my opinion, because then it becomes a national security asset. I don't want to go down the whole confiscation a rabbit hole here, but I agree with you. The math says there's no way that China has what they report. What I saw is around 25, but I believe 40. But that's why you can't touch an ETF, even Sprott, in my humble opinion.
Austin, I wasn't saying that China has 40. I was saying that the pair of nations. It was reported in Twitter. And honestly, I will retweet it next time so I can find it on my Twitter feed to find out who the author was. I tried to do a search while I was listening, and I can't find it.
So, Jim, really appreciate you coming by. Really love hearing from your experience in the markets, and just take off when you need to, but come back anytime. We like having you here. Bring friends.
Thanks very much. I really appreciate it. I've got to head to Tampa Airport. Thanks a lot.
Thanks, Jim. Yeah, I just nested that for you guys. I mean, that would be a big deal. It's like they say, money talks, BS walks. If other countries are making moves like this, tentatively, and especially, look, we talked about it in the last Spaces. A lot of these foreign sovereigns are building up their gold supply really quickly. And like we kind of talked about at the onset of this episode here, I think the world is preparing for this new paradigm. We are kind of in this global economic World War III already, right? And everybody's just kind of getting their pieces ready and getting in place for what's next, right? Everybody wants that security, and everybody wants to be positioned, right? I mean, nobody knows for sure what's going to happen, but everybody knows it's coming, right? We all know it's coming. And that's why it's important for us, too, as individuals to prepare as well, right? If these governments are preparing, then why shouldn't we prepare? It's so obvious, right?
Yeah, and I see Jabroni's listening, but man, he had a really popping room the other day, and one of the points that he kind of was making, hope he can get on and maybe talk a little bit more about it, is that everyone has this assumption that there's going to be this new regime change in the currency and this and that, and look what happened to the Dutch, and look what happened to the English, but the group of people that are supposedly allies and everything, they haven't always worked the best together, and we can't just assume that they're going to work as this one unit and that they're all going to replace it with this one thing, this one unit of currency. So it might be where things become more regional later on, where it's just that United States can't go intervene in Asia, or they can't intervene in Africa as much, and it's just whoever the strongest person there is kind of the one in charge. If Turkey is going to be the big guy in the Middle East, and China's going to be the big one in Asia, and United States is the big wearing the big pants up in North America. So hopefully he'll jump on soon. I see Frank's here, so jump in when you want to. Chapman, you're here too.
Howdy. I mean, I'm just listening, so, but yeah.
So I guess Liberty too. I'll ask you. Your one of your big holdings is you talk a lot about is Agnico Eagle. So what excites you about that one?
Well, it's exposure to a top producer with good management. That's a really good allocator of their resources. I think they make intelligent decisions, and I trust them with my investment. Right. And so, that's like we've talked about several times in these spaces. The golden rule is to buy quality when the prices are low. And so that's kind of the main one that I'm focused on when it comes to tier one producers. Right. And I'm sold on them. I see it on paper. I can read it intellectually, and I feel it in my gut. I'm sold 7 ways to Sunday. I like it. I'm convinced.
1,000% agree with you. 1,000%. Like, not even close. It's my favorite gold producer out of all of them, far and away. I'm more of a streaming royalty guy, but Agnico Eagle, it's a great company. It has low costs. It has a great portfolio. It's got a great growth trajectory. And I think, like, the market, like, they had some bad earnings, but Liberty, please slap my hand if I'm misinterpreting this, but in every dip in the sector, Agnico is the first thing getting bought back. I think there's some big players that really want to own a lot of Agnico. Like, it looks strong to me compared to the sector.
It is. It's a sector leader. And when I do technical analysis, it's one of the primary equities in the gold and silver space I look to for confluence in the sector and potential to find a bottom. Absolutely. It did break out of a much longer term trend, but so did everything else. But it caught on another just below that was kind of hiding. And the historical precedent of, look, let me talk technicals for 1 second, guys, because I get so pumped when I look at the gold and silver technical charts on these big names. The confluence that you're seeing across the board, equity by equity, the historical levels that the technical indicators are giving you, the precedence of the oversold conditions we have today. And you have to go back 2015, at least in most cases, which in most of these equities started a brand new bull run that we're at the top of right now. The opportunity that we are being handed right now, you can't ignore it. You absolutely have to be buying these equities on these strong supports every single time you touch them. It's that strong. It's that oversold. It's that historically massive of a deal. Technically speaking. And, I was reading the other day, I'll try to nest it, but some time ago, I think it's about a month ago, that the gold and silver sector, maybe it's just the gold sector, but precious metals were the most oversold sector in the entire market, the most oversold.
I've kind of got a trading question about that. So if you see the line, again, I'm not the best technical person, but if you see a technical support level, couldn't you just, in theory, set that at your buy price and just forget about it?
Sure, you could. For somebody like me who watches it as often as I do, I'm going to watch it. I'm going to see what the reaction is there. It depends. I don't like having those orders in unless I'm not going to be around and I know I want it, or I'm trying to catch a stink bid in something, maybe something a little bit smaller, one of the smaller, kind of home run kind of plays, over the counter play, something like that. But I like to be there live. But the short answer to your question is absolutely yes. For 99% of the populace, that is the way to do it, right? You can identify your target and, buy with confidence, have your level set. And you can sometimes overthink it. I have done it before, but just to note, if something is extremely bullish, you can fall a few ticks short of that strong support because everybody's looking at the same thing, right? And sometimes it'll buy just above or just below. But the safe way to play it is give yourself 2.5% either way of the target.
So Warren Buffett has a saying about it's like in baseball, investing is like baseball, where you get infinite pitches and you can just wait for that perfect pitch. So something effective. He only has or if you could only make 5 or 10 trades in your life, that's how investors should be. But you would say no, just get in there every day and be trading, or just.
Oh, no. No. I don't click that much, right? I watch the market every day, though. I always have one of my monitors up looking at the markets. I'm just here by the nature of my job and what I do, right? I'm just always there and I can see it and I can be live with my account, right? So I don't necessarily have to set stuff up like that, right? I can see the reaction. I can see the volume on the day. I could just see it. I can feel it as it happens in the moment. And so I play it like that. But the short answer to your question is yes, absolutely. That is how you should do it. You shouldn't be making a whole bunch of trades like that. The more you click, the more you're going to get into trouble, right? I like to trade massive swings. If I'm going to get in and out of something, it's because I anticipate a major swing. And these major swings can, bring your retirement up 5-10 years. I mean, these are big deals. And so even though I may be extraordinarily bullish in uranium, for example, if I see a 20 or 40% sell-off coming, I'm going to dump some of that stuff and I'm going to buy it 20, 40% lower, right? Especially when I have the confidence and the conviction that I know that that's what's about to happen. Absolutely. I will take some of my profits off of the table and I will set them aside and I will buy back in at those supports when we get there. All right. And so you guys have been following me. I've done that several times. Gold and silver, I'm a little less prone to wanting to do that because I just the situation's a little different for it, I feel, and it's got different tailwinds and headwinds, and the next target low, it's relatively close, and so I'm happy with what I own. I'm gonna check that out. I'm not gonna swing trade it. I'm too happy with it down here at these levels. If anything, I'm looking to buy a lot more when we get here.
Yeah, I would just add, Alex, that it is actually therapeutic almost to be able to sit in cash at the right time and be patient and disciplined and wait. We just went through 12 years continuously where cash was effectively a hot potato, and literally everybody could not get rid of it fast enough to get something that threw off some kind of yield, and that's that's kind of the Fed is the market, and that's the way they wanted it to go. They wanted everybody to take more risk, and so they pushed a bunch of cash into the economy and made it a hot potato. But there's it regardless of the macro backdrop, that in your own personal trading is that there are times to if beyond whatever investments you have that are unchanging, if it's trading money that we're talking about, if you don't have an idea or you don't have a play, it is okay to just sit in cash and percolate and wait for something to come along. There's a famous value investor, Seth Klarman, who I'm sure is familiar to many people here, that has a very famous approach, and he's quite well off and a very successful hedge fund manager, at least prior to QE, which seems to have killed a lot of hedge fund managers. But he's known for sitting in cash 80% of the time, and he has that kind of very high level, very high standards before he puts cash to work. And whether or not that always works out, I don't know everything about self-acquirement, but the point is that people do that, and there's value to that. And if you don't have a good use for money, then taking gains and profits in other places and just sitting on it until you figure out something worth taking a risk on is a really good way to do it.
It is. I think you got to separate this sector from just like the broad indexes, though, right? Like back in June, like I was buying Agnico Eagle. Like if you have an opinion on something that is one of the best companies in their sector in the world with a great outlook, and it's down 42%, I just think it's close enough sometimes, right? Like in 2008, this sector bottomed way before the rest of the indexes, right? In 2020, this ran way before. I think whenever investors collectively start to agree with what I feel is inevitable, maybe I'm wrong, that the Fed has lost this fight and we are in for structurally negative rates, I think we take off, and I think that's way before the S&P 500 goes. So that's one of those things. Like in this sector specifically, I almost think you got to take a valuation approach. Like if it's cheap enough, at least in my opinion, I think you just buy it.
Austin, do you know a date for when we're just going to say precious metal equities bottomed in the 2007-2009 timeframe? Do you have a date that you, or just a time frame that you keep notched away in your brain about relative to I think we can safely use March of 2009 as the bottoming of the last real bear market. I'm not gonna ever concede to anybody that 2020 was anything other than a whack situation, an anomaly that does not qualify in my book. I'm talking about kind of letting interest rate work do what it does, and take out some zombie companies and all that sort of thing. And whether or not we get there this time in anywhere near the same level as we did last time, that's not the point. But I'm saying I think it's very clear that March 2009 was when broad markets reversed. And I'm just curious if anybody here has, Austin, if you
October
of
2008.
Of 08. Interesting.
Yeah, that's what I had alluded to at the onset of the show, right? I talked about once the market accepts that it's in a secular bear, gold and silver will diverge. They will start the next run before the broad market rallies. In fact, silver is notorious for doing it at least 3 months in advance of the broad market. That's a historical analog that you can reference. So,
all right, we got Jabroni in the house. So he's just landed from an airplane, so he might be in a taxi or something. But I'd love to hear you kind of repeat that kind of the mantra that you were, I don't know mantra, but the thought that you were saying in the space the other day about the next system, and it might not be one big power that takes over versus what happened in the past.
Yeah, I'm in a car right now. I just got my rental, so hopefully it sounds okay. But yeah, I think you're talking about the geopolitics angle, right? Like how it's going to be a lot of more spread out demand. It's not going to be this globalized, highly efficient system. Is that what you're referring to?
Yes.
Yeah, so I mean, I just think like as we get into kind of a breakdown of the international order, and you have kind of like this globalized network of supply chains that is allowing multinationals and governments and utilities to arbitrage and hedge efficiently. When that goes away, that's going to add basis points, if not whole percentage points, onto the price of commodities and everything. I mean, it's going to make everything just like it's very deflationary. So unless you're somebody who thinks we're going to like put the genie back in the bottle, you have to kind of assume things will get more expensive, and that's what we're seeing everywhere. So, I don't know why you wouldn't expect these things to happen. It just takes longer because we're still very well kind of in the denial stage of that, and you just have to turn on like CNBC for that kind of a thing. The narrative is, when are we going to go back? I think it's a little bit schizophrenic because you also have this like new normal bullshit that you hear everywhere where people are like, oh, this is work from home and all. So things like that are warring against this, like, I think instinctive sort of boomerism of, when do we go back to this globalized system that we've known? Like in many cases, that's all they've ever known. So you have these two competing kind of tug of war scenarios going on, and that's going to take a long time to play out because it's really a narrative battle, and narratives don't die easily. You have to kind of like vampires, you got to kill them by staking them through the heart, and I don't think we're even close to that yet. So, I'll just, I don't have much time on here, but what I'll say is I've noticed on my feed, I had a lot of friends that I gained through like the silver squeeze, and it's really interesting to watch some of them start to finally capitulate. Like I'm seeing tweets that are very like emotional in terms of the trades not working out, and these are people who were like talking previously in like 2020 about silver like it was a fucking GameStop, and I think that's very healthy. I think it's a really good sign. I've accumulated my positions to the point where I don't feel the need to go out and buy a shit ton of these things. Same goes with uranium. Same goes with gold. A lot of other commodities. If you're in a position like mine, and you have the kind of like ability to keep that capital dead, it's a very good thing to start seeing people that were kind of long in the space, or at least moderate in the space, start to get disillusioned and leave. Because if you lose that money, it's not going to change your life. It'll suck. But if you do hold on and your thesis plays out, that's how you make good money. So I'm just content to sit in a lot of these commodities, and these mining companies, they're getting destroyed. They're just, the sentiment in my mind is pretty low, and I just want to see it go much lower personally, because it just means the upside is going to be there's going to be demand. There's a floor at some point.
Music to my ears. I love Blood in the Street.
Yeah, we're not even at blood in the streets, though. In my opinion, I don't think we're there yet, personally. But I like to see. I think we're on the right path.
We're like the tampon on the train, or what?
Whatever visual you want, man, you go with it. I'm not gonna. I really. I don't want to go down that road, but yeah. So I mean, that was just my thought. A couple of good guys who I know who are just like shitting on silver. Like they're actively actually tweeting against it now, and I'm like, all right, let's see how this goes.
I do think that we are far from returning to that globalist world that everybody, and I think that what Jabroni's saying about people just, they're still in shock that this globalist system is bifurcating or, just breaking apart. I think one of the things that, and I do see things being structurally more expensive in this. I don't see any other way, even if we were to, somehow get over our issues with Russia. It's like the one thing that is bigger than Russia by a country mile that I've realized through the Ukrainian invasion is that, which I only discovered afterwards, was actually completely and totally predictable. It was well predicted. It's actually something that I can, go on YouTube and figure out, and it's only because I was completely ignorant to international relations and the geopolitics of the world to know that this was going to happen. That the other thing along those lines that I now see as inevitable, essentially inevitable, is at some point, and this is, talk about like mind blowing. At some point, the U.S. and China are going to have to go to war. and there's just no two ways about it. And where that goes.
Okay. Oh,
So,
sheesh.
well, this is my
I know.
either the
Keep going. I'm
Chinese
sorry.
are not going to take Taiwan.
They're not.
So there's somebody's going to be the big loser. Either China is going to not take
Are they?
Taiwan, and they're going to have to take their lumps,
Really?
or
Why?
they will take Taiwan, and then there will be absolutely no choice for the U.S. but to engage them, because if we don't, then Japan, Australia, and everybody else in the Pacific theater that relies on us for a security guarantee is going to say, oh, we're done, because the U.S. is not. And this is all just, you see, or I just use my name, Brett. This is all Brett's little, kind of reduction of these, highly academic discussions that I've seen, that I'm like, oh, and they're by the same people who all would have told you since 2008 that Russia was going to invade Ukraine someday if they all kept going down the same path. If Ukraine kept going down the same path. So my point is that I do see it, and it's hard for people to get over, but I do see at some point that there's going to be. I don't see how we get back to that globalist kumbaya that we had.
Well, remember a couple.
John Mearshire has an entire lecture on this 6 years ago, predicting this exact situation exactly the way it unfolded, for the exact reasons it did.
Yeah.
Yes.
I mean, that's exactly what I'm talking about.
Here's the thing.
Mearsheimer has videos since 2008 saying exactly that, saying that if you understand his theory of global superpowers and what they do, then and he has videos since 2008 saying this day's coming, it's coming. Oh, it's they keep now they're basically, Ukraine is basically acting like a de facto NATO member, and Trump armed them. It's you if you live on the sphere of per Mearsheimer's view of the world, if you live in the sphere of a global superpower, you don't get to make decisions about what how you want to do things. And it's like look at Cuba. Cuba is still getting wrecked with economic sanctions all these years after 1962. So, and that's no, it's not. It's
totally their fault.
It's that we don't.
They could work within the neoliberal system, like plenty of other nations have done, and
No,
they could be fabulously rich.
You're wrong. You're wrong. And it's just that they wanted to do.
Disagree with you there, man. Chapman, you assume they have.
We're in Chapman's world. This is sometimes when Chapman goes into, I can fix all the problems of the world.
I'm not saying I'm fixing all the problems.
This
I'm
is
just saying
like Game of Thrones shit. Like these countries, they don't have agency. They don't have a foreign policy. If their foreign policy, I mean, you look at someone like Ukraine. Ukraine is a very regionally strong nation, and even they were a vassal to the Western policy. Basically,
this is okay. I get that, but in Ukraine is the interesting thing that everybody doesn't talk about. Damn Ukraine, is that everybody, like the very people that said oh yeah, the invasion was about to happen. Well, they were the globalist CIA that everyone was rejecting at the time. Very interesting. That was saying oh yeah, the CIA coming in. It's like oh, by the way, Russia's about to invade Ukraine, and nobody believed them.
Well, right, because they believed them in large part due to the fact that we just blew up Afghanistan after 20 years, and everyone saw how fucking inept we were. So they were just like, yeah,
I don't know. We were inept.
And I would just add that the reason that we didn't believe them is because we were all watching the Olympics. I mean, we're just distracted, honestly.
I didn't even know there were Olympics, to be honest. But that's just me.
Yeah, because I think Japan decided they were going to go forward with them for some strange reason.
The point we need to not lose track of here is that it was a predictable event.
Yeah,
even for the last 20 years, Putin himself was saying, if you do this, this is what I will do in response, right? This was not This was not a surprise. This was a predictable event, just like Cranium was talking about.
Yeah,
Correct. And if
Which is how you know we picked the fight.
If you're on record in my book, predicting that, and that shit comes to pass, and it's that big, and you're in the minority, you're a contrarian, and then in my book, you instantly get mega points, because it's unlike, this is not like somebody on Twitter talking about some trade that's successful and you don't know, we're talking about like it's super in the record, and that was a contrarian call, and it changed the goddamn world. And like I said, I live in Vermont. We love winter sports, and so everybody here was like, elbows deep in, the Olympics.
But
everybody's like, "How? What is this?" Hold on, Chapman. I'm talking. Everybody's like, "What's going on?" That there's all this talk about Russia. It happened during the Olympics, and as soon as the Olympics were over, the invasion happened, and so it was just, in my world, I look at the 2022 Winter Olympics as the last time I was that much, just living in the clouds. Like I realized that I need to like get my head wrapped around some bigger things that can happen, and that's because there was definitely a before and an after, and so Mearsheimer gets the points. He has said that this is the same dynamic that we have in the Pacific theater, because there is no simple solution. And the point of it is to go back to what Jabroni said about structural, things being construction bifurcated and things being more expensive.
Well, I don't have much time, so I'm gonna have to hit the road soon. I just wanted to pop in and Alex invited me to make sure. But I would say to that point, Mearsheimer's great. I remember reading him a lot from college. I would recommend anyone check him out. He's got some very good theories. But what I would say is that from my understanding, and I don't have a crystal ball, but I think there's quite a few demographic challenges facing a lot of the basically the whole planet. There's only a few countries out there that have positive demographics. So you're going to see a kind of like a time crunch in these sort of like, expansionist actions where countries are going to be kind of like shit or get off the pot scenarios with, these actions. There's not enough manpower to take and hold these resources in the next 10 to 20 years. So even a statesman like Putin, who actually, I don't, care what you think about him as like a moral person, he is a very kind of higher percentile leader in terms of how he views like geopolitics. And this guy was completely caught off guard. I don't buy the Western, bullshit about how they're getting completely demolished, but they're not performing what everyone, thought they would be performing at. Ukraine is still grinding downward, I think. But the point being is it's like a war of attrition at this point. And that's something Russia can't afford to maintain over. It'll be interesting to see how this plays out over winter, because I don't think that they're going to end this thing before the next, 2-3 months. And Ukraine, I'm hearing a lot of hawkishness from. So a lot of that, I think, is based off of Western support. I don't think they can maintain that if they don't have us giving them billions of dollars and all of our, third-rate weaponry systems. But I would say that this kind of thing is going to be more common because these countries realize they don't have the youth in the next 20 years to replace the losses they're going to suffer by doing this kind of thing. And to counter, and just give you a counterpoint to that, though, I don't think China is looking at this personally and seeing like, oh shit, like let's go for it. I almost feel like the performance of Russia is a kind of like a warning sign to Xi, where it's like, I don't think we can pull this off.
Yeah, all of his weapon systems are fucking based on Russian technology.
I don't see it. I think she is looking at this and like, the constraints I see with China are they would have a very ambitious, attack vector it would be logistically challenging in a way that hasn't been tried for a century almost, and they would
Well,
basically have one shot. And if they mess it up, either way, they're going to be a global pariah. I just
exactly, and they cannot afford to be that.
yeah,
They're
there's
not
no
going to
way.
do
I
it.
don't see it happening personally. I mean, I think China, if Russia had steamrolled Ukraine and everything had gone according to plan, they severed the Kiev in like a week and they took the country. I think China would be going for it. But looking at what they're doing now, I think China's like, fuck this, we can't do it. We got to figure out another way. And they're going to try the diplomatic route. They're probably going to do a lot of like psyops with young, Taiwanese. They're going to try to do some sort of like, radio communist China bullshit instead of radio for Europe. But I can't see them doing an invasion at this point, personally. But that's
The two things that I will add, and this just food for thought, is that in terms of like the moral judgment of Putin, is that Mearsheimer's view on that is that anybody who would be sitting in his chair and acting in a rational way according to that superpower view of the world would have done exactly the same thing. And if you wouldn't have, then you would never actually have ascended to that leadership position. So that's just, it's something to think about. Everybody we do
Okay.
a fantastic
Well,
job of making him out to be a bad guy. The second point that I would make is that and also, again, just because I'm a big fan of Mearsheimer, since he's the only person who got it right,
in
literally,
the CIA.
is that, well, that's fine, but I don't. The CIA doesn't make YouTube videos
I
since
know.
2008 saying it.
Well,
But the other thing is that Mearsheimer would also argue that Russia has a far deeper interest in winning that war at any cost than anybody in the West, and that if this war starts going against them, the next place that they're going to go is to their missile arsenal, and they said they are going to level that place completely. So on some level, it's, and you can disagree with Mearsheimer all you want, but my point is that that's where this goes next. And so for everybody that's like rooting along for for the Ukraine to to somehow pull it out, that it gets worse at some point before it's over.
it doesn't matter if Ukraine has to pull it out. From a Western policy standpoint, all they have to do is basically weaken Russia to the point that they won't be able to do anything else. That's a very realpolitik Machiavellian point of view, but I'm telling you that's what's going on.
I couldn't agree more with you. We're just using Ukraine for this. And on some level, I do have to say, on some level, I do have to say that I think the world would be better if the Ukraine would just agree to be a neutral country. I think the world would be better if Taiwan would somehow, like, that situation would just get resolved. I think the world would be better if I actually agree with the view that if you live next to like the biggest, baddest dude in the fucking neighborhood, like, you just have to take your orders. Like, I think that there's something to that. I think that this I think that
States,
if you look at Cuba, look at Taiwan, you look at Ukraine, it's like you're all a mess and have made things difficult for the international system.
And then Cuba started seizing a whole bunch of property from people. I mean, look, the United States has had the same foreign policy for the last 100 years, and that is the free trade of goods and services. That entails you opening yourself up to American corporations, yes, but, it's not a, we're going to go and just, like, invade you and just, I mean, look, there are countries around the world, South Korea, Japan, everyone that has, works under the U.S. sphere of influence, Pax Americana. I know everyone loves to, like, just, oh, God, boo-hoo, the fucking United States. Like, we're just so evil. Like, really? Everyone that works in that system has gotten fantastically rich. China has gotten fantastically rich because they made peace with us. We don't have, it's a very, very simple system, everyone. Free trade, that's it. Don't,
I don't know if I
rule
would
of
agree with
law.
that.
Look,
I think
I'm not saying,
marginally you see.
are we like completely just absolutely,
No,
the
no, 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 no,
saints?
no, no.
No,
Like
of course not.
caricatures are
But
unhelpful. That's for sure. But the point being is like there is quite a bit of exploitation going on. I mean, we can't even agree that our own
sure,
elites, quote unquote, are acting in our best interest. Why would we expect some Guatemalan to feel happy about the way that our trade agreement with their government is, marginalizing them? That's not. I mean, that's not realistic, man. I mean,
I'm not saying
I
that
agree.
everything is perfect,
Well,
but
nobody's not. You said everyone's getting rich under our system, and I don't
well,
think that's necessarily
almost
true.
everyone, because they simply are not. You have a lot of. It's not a universal rule. Okay, there is no such thing as that. But the fact of the matter is that if you were to just look at everything sort of on the whole here, and when you find that if you are, ultimately, all Cuba would have to do is just stop. Well, they'd have to make a lot of people in Miami happy. Look, there isn't a magic wand there, of course, for the Cuban situation, but I mean, yeah, there is some issues in the way that policy has been implemented, but mostly those are issues that have happened, I would say, in the last. I mean, Central America is a different case for one thing, because you have to think about the sort of the Monroe Doctrine and how that sort of played out in ways that were not necessarily helpful, because it was like crush the communists first and then think about economic prosperity second. Whereas the United States has always typically had a policy before that of, well, we're going to crush the communists, but at the same time, it's also we want to have the good and flow
What I
businesses
find
here.
interesting and what I find helpful is to reframe United States, okay, not as a country, because we brand ourselves. The marketing is very slick. It's very good. The United States is marketed as a nation of freedom. It's a bastion. It's a shining city on a hill. Okay, that's great. 100%. I am patriotic, but the idea that we are not an empire with global spanning reach that is analogous to a organized crime operation like the mafia is I think a much more helpful view. We have decided that it's much easier and cheaper for us to forego all the unpleasantries of actually conquering territory, and we've followed in the footsteps of other empires, and we've expanded our footprint. We offer protection, and so therefore you simply set up arrangements, either open arrangements through diplomatic agreements, or you just sort of do these under the table deals, which I think are much more common, and explain a lot of the bullshit that goes on over the entire globe personally. But that's kind of more efficient in terms of describing the world as it is, and that explains why we do things that seemingly make no sense. And it's really fun to blow the minds up of like some left-wing person who is all about socialized whatever. They realize, oh wait, we pay for like all the universal healthcare and everything for Israel, or basically we fund all of Europe's defense for no reason. We get nothing really out of it other than the continuation of these agreements. So you frame it in the sense that we're a mob and we just get our cut. And that's basically what it is. There's no good or morality to this. It's just a matter of we want to maintain that cut. And
so here is the mistake.
Dominance.
Here's the mistake that most nations make. The United States will tolerate a level of protectionism, yes, but you cannot go and out basically arbitrarily seize assets and essentially abandon the rule of law without.
I mean, we do that all the time, man. I mean, I can tell you, we were doing that domestically for like all of COVID.
I do have to say, I would love to get this. I was trying to keep this, back to what Jabroni was talking about and what the title of the space is, which
Oh,
is
boy.
inflation is here to stay.
Oh,
So
well,
I'm
okay.
just trying,
Well,
I don't want to get into like, and I honestly don't
Sorry.
care about getting that far afield into policy discussions. I will say that I do resent, and I know it makes my life, better that we do go all over the globe kicking ass and taking names.
Yes,
But
the world is much safer.
you know what? I think it's an abominable position to be the one country that goes all over the world controlling things. So
yeah,
whether
well, the
or not,
alternative
I'm
is
not
a lot
saying
worse.
I gotta drop off, so I appreciate
Later,
letting me
Jay.
speak. I would say
Sorry, I know.
one last
I'm being
thing.
a bit
I
of
don't
an
think we're
ass
the only
tonight,
one
but,
though.
yeah.
Clearly we're not. But yeah, I get where I'm right there with you. So, but yeah, thank you guys for letting me drop in. Next time I'll do it again. Next time you guys are doing this, is good.
Tomorrow night, uranium.
Have a good
Space.
weekend.
I'm gonna jump in.
Oh, yeah.
All right, bro. Talk to you later. Bye.
Anyway. But I mean,
Another
look,
interesting, colorful character in the uranium and gold trade. He's one of my favorite to listen to.
Well, he's right about a lot. I agree with him on a lot.
The one thing I've been like wanting to say about this whole Putin thing, like, oh yes, Putin is like this great leader, and he wasn't going to tolerate Ukraine. Look, he got what he wanted, which was Crimea. And I actually had this conversation with some people a long time ago. Like, look, they're going to want. They have a very the Kremlin. They have a lovely, patriotic, romantic feeling about Sevastopol. Just let them have it, all right? Who gives a shit? And I think if the West had just agreed to say, okay, fine, you can have Crimea, this probably would have stopped. And that could have been some sort of a settlement. But, there wasn't really...
Look, man, we've been meddling in Ukraine for a long time. We've pulled off color revolutions over there. We've turned over elections. Look, we manipulate so much across the planet. We install democracies with our puppets all over the world. We are an empire, just like he was explaining.
You're talking about these people in Ukraine as if they have no agency.
Chapman, you have to mute when the host is talking.
I'm sorry. But you're talking about these people in Ukraine.
Nope. You have to stop. Now you have to stop and let. I want to hear what Liberty is saying.
All right, fine.
Please mute.
Look, I was just expanding on what Jabroni was saying, that we are an empire. We install, in every sense of the word, democracies with our puppets at the helm, right, to in turn create the vassal states that serve our purpose. Whether it's for resources or territorial influence, this is what we do. This is what empires do. This is what we have been doing in Ukraine from the color revolutions, the overturning of their elections. Look, we tried to get them into NATO. Why would you do that? Putin's been telling you for 20 years what he would do in response if you did it, right? This is how we come back to what's his name? Now I'm having a brain fart. I was the one who said it, and I can't even think of it. This is the basis for all of this stuff. This is how you know that we did this on purpose, by the way, that we goaded Putin into this because we knew what his response would be. And we want this proxy war, I think, on purpose because everybody anticipates the paradigm change that's coming across the globe. And this is just one more way to hammer home influence in a way that you can control it. While you still have complete control of your hegemony, right? You can influence the outcome through the strength of your dollar and your military might, your trade channels. There is a lot of power at the disposal of the United States to impact, what happens next. And if you don't do it now, you might not be able to do it tomorrow. And it's just so obvious to me. It's so obvious to me. And the only pushback I ever get on this stuff is not because it's a rational thing that somebody would want to do in order to maintain their power, to be the first empire ever, to get a second reign, right, in the new paradigm. It's because they say, oh, the politicians are too stupid to ever do that. Horse crap. They're not too stupid to think like this. This is what they do for a living. There are people you have never seen in your entire life scheming this way constantly, right? This is what they do for a living. Like, I just don't understand it. We give these politicians too much credit for being stupid. Like, I understand that, Sheila Jackson Lee is a moron, right? And she's also a bad person. She treats, all the people who work with her and for her like little underlings, like she's some kind of queen, right? And then you got people like AOC who have no business talking about anything in terms of, anything economical, geopolitical. She's probably a good person with a good heart, would make a great mother and all that kind of stuff, right? But she has no business being involved with very important things that matter, right? But
Dude,
by and large,
I'll say, dude,
but look,
you are great at charting, but you need to start a podcast in this rant. This is fantastic. Anyways, I'll be quiet. This is like your superpower. Go on.
well, thanks, man. I guess what I'm trying to say is that a lot of these politicians are lawyers, they're doctors, they come from very extensive backgrounds and, pedigree. These people are not stupid, all right? They may get influenced, they may get bought off, but they're not stupid. These people know what they're doing, all right? We got to stop calling these people stupid because it gives them an excuse not to suffer consequences or be held accountable for their decisions because, how could you hold somebody accountable if they didn't know any better? They do know better. They do know better, whether it's intellectually, whether they were bought off, or whether they decided to do it, whether they came up with it themselves. I'm just sick of hearing people come up with all of these excuses for why what's so obvious can't possibly be happening. We have to invent all these ways around it to try to rationally explain what's going on when it's staring you right in the face. We have an empire that we have built, and we're trying to keep it. That's what we're doing. That's what we're doing. Right. And the precedent is your entire life. I think everybody in here is probably within their 30s or 40s, right? Something like that. Your entire life, you have witnessed our wars and our expansions overseas and the installations of our democracies, right? And the propaganda is so thick, right? We're always trying to free people and give them a better way. These people totally happy without us before we came over there and bombed them to hell. We murdered millions of people in the Middle East. Millions of people in the Middle East. We murdered them. And our tax dollars paid for it, you understand? For what? So we could install our puppets, so that we could have influence in the territory, so that we could have control over resources. You understand? This is what we do. So, of course, our empire is trying to protect itself. Of course. And it's not like the only people who understand the sovereign debt crisis that's developing globally are the people who buy gold and silver and write newsletters. It's like these people know exactly what's coming too. So they're thinking about this too. They're trying to find a way out too. And of course, they're all scheming. Of course they are.
Yeah, I agree with most of what you guys are saying. Just for one person to put something on Chapman's side in this one, I think like it's one of these things. I think like a lot of people view the U.S. use a Star Wars reference, and since Alex used some badass movie references earlier, that it's kind of just like imagine that Star Wars ended after the Empire Strikes Back. Like it's one of these things that if you view the U.S. as an empire, I think even if we lose our quote unquote empire around the world, I think we still win. Because the only reason this globalized system even works is because we installed it by basically guaranteeing free trade at Bretton Woods after World War II, right? What we have today is what countries have been fighting for centuries to achieve. And if we pull back because we quote unquote collapse or lose this empire, I don't know. Like our geography is so good. We have cheap energy. We have great companies, great schools and universities. Like I think the U.S. fucking thrives with or without this empire. Just one guy's opinion. So I think we're good, assuming we're all Americans. I guess I don't know.
I don't know about the university part.
Some of the elite ones, I mean. We have the elite ones. Maybe the average one less or so.
Yeah. Well, Brent Johnson touches on this to an extent too, right? He references that we have a monopoly on the clean water, right? We have a lot of things that we need to make it without anybody else. Would the transition be tough? Yes, we'd have to start manufacturing a lot of things again that we haven't made in a long time. We've outsourced a lot of things. You'd have to bring it back in-house. But could you do it? Yes, for all of the reasons that you laid out, it could be done. The United States is in an extraordinarily good position to weather the storm, whatever it may be like. But it is a very good point that you make there. I would say that because we installed the system, like you said, it does give us a great advantage, but that nonetheless doesn't mean that the system isn't breaking. I do think the way I see it is that the United States is trying to come out of the breakage still installed as the empire that it is today. Because once the system breaks, you will have discussions and countries attempting to say, okay, what's next? Well, we want to go this way. And I think that the United States is leveraging itself in a way to say, no, we're gonna keep it exactly the way it is.
And either way, I think we can all disagree on why the system's broken or whether it was good or bad or moral, immoral in the first place. I think everybody agrees the system's broken. And more broadly, like I think the real legacy of just like the cerveza sickness, I don't know if you can say that online yet, is just like trust is dead. Like trust in our institutions has been fading for years. And I think like the last couple of years, just like the nail in the coffin, both in the US and abroad. Trust in institutions is completely dead. I don't think it's coming back for a generation. And I think gold and silver eventually are the main beneficiary of that because people do not trust governments, institutions, or anything that is backed by them. It's going to accelerate, in one guy's opinion. So that's the number one reason to buy gold, besides the fact that central banks do it. And don't fight the Fed means buy some freaking gold.
Chapman, go ahead. Response.
Oh dear God, there's a lot there. Oh jeez, I was following along, but I don't have things written down as far as like the points to go. All right, so if the system is collapsing, one, what replaces it? And two, let's just say for just argument's sake, all right, let's just say that Saudi Arabia decides they want to leave the U.S. sphere of influence. All right, that's fine. Good for them. They lose their protection, basically. Like, there isn't anybody else in the world that, what do you want to call the American Empire? Whatever you want to call it for a reason. There is no one in the world that has 7 aircraft carrier battle groups. It's not just aircraft carriers, it's battle groups, it's all submarines, everything that goes with it. Nobody has that ability to project power. Nobody has the ability to invade a landlocked country on the other side of the world. We did that. Nobody else can do that. So, I get that, okay, let's see. If the system is going to collapse, there is no guarantee that, or there isn't anything that you could say that, okay, well, you're not going to have people that are going to be looking back to the United States to basically rebuild it. Because we're the only people with actually any real power. I mean, in terms of actually like power projection. I mean, yeah, the Chinese they got an aircraft carrier. Oh, good for them. They're trying to become, maybe a gray water navy. It's like, congratulations. We can still hear their submarines from, thousands of miles away, and there's not much they can do about that. So, it's just, I mean, I get that, yeah, we've got a lot of, like, I guess, crimes the Americans, the American foreign policy has basically done to a lot of people, but it's just like people are the current people around the world. They still look to dollars as essentially something stable. Everything is still traded in dollars. I mean, look, you look at like the contract for, let's just say, global uranium. I mean, it literally specifies in the Niger mining law that things are paid for in U.S. dollars, not euros, not Chinese yuan, not yen, dollars. So, I get it, but, I think this exercise would be much more intellectually fulfilling if it was like, okay, the system is slightly cattywampus at the moment. How do we fix it without like tearing the whole thing down? Because I feel
you gotta appreciate how big of a deal it was when the United States cut Russia out of SWIFT. That was a big effing deal. And so you have every other nation on the planet looking here saying, okay, at any moment, a switch could be flipped because the empire doesn't like the way I'm talking or I'm behaving for any reason whatsoever and cut me out. and my reserves go to zero instantaneously. That is a big deal, Chapman. So you have to understand that.
I'm not saying it's not a big deal, but
it has to be appreciated. I mean, you're describing what you're doing is describing how the system works right now. We understand that already. We're talking about why it's changing, right? Why it's inevitably going to change. You have everything from the sovereign debt, right, which is going to collapse. It's going to collapse because it's a mathematical certainty that it will.
Well, everybody has that.
All right.
Though. China's got
everybody exactly,
yeah.
Exactly. Yeah, this is the point.
So why would why would that cause the system itself to collapse? Like the question I was saying is like, okay, what is going to in order for the system to collapse, something has to replace it. That's my question.
Exactly. And so if you're going to replace it, then what incentive do the rest of these countries have to go right back to the same country who will screw them over in an instant, just because they can, right? These other countries, look, it's not 50 years ago. A lot of these developing countries are getting much more further along. Think about all these countries like little kids, like they're starting to grow up. It's like, I don't want to go to bed at 6 o'clock. I'm 16 years old now. Let me stay up till 10 o'clock, right? It's like, it's the same thing. Like these countries are saying, well, screw you. Like I'm getting older. I'm getting more independence. I can take care of myself. Like, why do I want to? Well, then move out. Okay, maybe I will. That's you have to think about it like that. These countries don't want to get dicked around and told what to do their entire life, right? They want independence, and that's okay. But you got to understand that you have a big bad empire that's saying, no, you can't do what you want as a sovereign. You're our vassal, and if you don't like it, you'll get cut out of the system that we made. Right. And this system might have been in place before you were even elected leader of your country. Right. It's like you have to live with and deal with. Right.
Well, I mean, look, cutting Russia out of SWIFT, I mean, yes, fine. But you also have to realize that this was war on the European continent again in a major way. I mean, you can't just sit around and basically tolerate that. I mean, because Putin was a rational actor. Oh, sure. Because there was some mythical NATO army just sitting on the Ukrainian border ready to march to the Caspian Sea across the steppe. Like, there's nothing rational there. There is absolutely... He has NATO on his border already. I mean, through the Baltic.
Ukraine is significant for a lot of reasons. It was very important in World War II. You have to understand that that's how all militarization was mobilized through Europe to Russia. And so Ukraine is not just some ordinary state.
I mean, the Nazis did go through, like, the Germans went through, like, they had 3 movements. They had Army Group North, Army Group Center, and Army Group South. I mean, as far as like Russia feeling threatened about being invaded, I mean, no one has ever really managed to invade them, and I don't really think there's any country that ever is going to be able to do that because it's
Mongols.
Not really...
Mongols, anyone?
Well, okay, that was like 1,000 years ago or something like that. No, that was like Mongols. Anyway, I don't know. It's just there is this. You can see like somebody that is being a rational actor. I see somebody who wants to cement his legacy as Vladimir the Great, and wants to bring Russia back to some age-old quarry that just doesn't exist anymore, and there's no reason to. Literally, the Europeans are more than happy to basically buy their natural resources from them. They're more than happy to sell them Airbus jets. They're more than happy to give them all the technology that they need actually for their modern military hardware. I mean, there is, again, he just has to, there isn't any threat to Russia, within this, working within the existing system. There is just this paranoia and this idea that, I mean, you could say like, well, all right, you have to work within, Brett, you could say like, okay, you've got countries and you have to work within the paradigm of who's your next door neighbor superpower. Well, Russia is not a superpower. They haven't been for 30 years, arguably longer than that. So that's just, how are they not being, basically punished right now for their irrationality and thinking that they are? So, you disagree with
Look, man, I think that you could look at it from several ways. I mean, there is obviously a play for a technocratic global state here, and perhaps not every country wants to be on board of this, right? And
Well,
I think Russia has said as much. Right? They said they don't want to be a part of our manufactured Hollywood technocratic globalist society. Right? They want to maintain their culture and their way of life, whether it's right or wrong. It doesn't matter. That's what they want, and they should be respected for that.
I think it's no surprise that this happened after COVID lockdown, like after the end, essentially, of what we call this pandemic, where everybody was just isolated, and you had, I think that was where maybe there was some rationality here that kind of broke down on the part of the Russians. I mean, apart on the people within the Kremlin potentially, that sort of all kind of just went along with this, and we
I think there's truth to that. I think there's truth to that it was as good as it got. Like that was once the pandemic happened. Yeah. Then all the superpowers are like, oh, everything's fucked up. So if anybody's going to do anything, it's going to happen now. I think that makes total sense. I don't think it's necessarily irrational. I think that everybody played along and took the economic expansion and got whatever gains for their country they could get during that long economic expansion. And then they're like, oh, this situation is totally fucked up now, and it's not going to get better anytime soon. So if anybody's going to do anything, now's the time. And they did.
Yeah, it feels like we may be into like the category of distinction without a difference here to one extent. So like whether like no matter why this happened or whether it should, like it did happen, and just like the overall outlook for how sovereign nations will approach their reserve assets has changed forever, and I think that's undeniable.
Exactly. That is the takeaway. That exactly right. That's a very good point. It's a very good point. That's why I said kind of at the onset of the show that everybody is preparing for what's next, because we don't know exactly how this is going to unfold, but we know intrinsically, intuitively, that whatever it is, it's on its way, and we're going to have to deal with it. Like a paradigm shift is in the process of happening. You're living through it. This is maybe the most extraordinary time to be alive in human history. The confluence of events that's taking place right now are extraordinary.
Okay, I was about to say something. I didn't want to start interrupting the host. Brett jumped down my throat again. So.
Oh, we're gonna talk afterwards. Don't worry.
Oh no! Oh great! He's gonna send me a spanking gift or something. I don't know. Jesus. Anyway, what was I gonna say? I think there would be a paradigm shift, but I don't think it's going to be in what you might think it's going to be. I think it's going to be based upon the key. What is the key lesson from this? Your currency is strong and amazing if you can export shit. And for Russia, they've got energy and they can export it, and their currency has strengthened because of it. And we can't keep it down because people want their products. That is going to be that's going to be the key lesson from this. It doesn't matter what the global hegemony wants to do to you. If you have stuff that people want, and you can basically, that people depend on, then you're golden.
Go ahead, Razor.
Hey guys, what's going on?
Just talking the good old gold and silver and the paradigm shifts that's going to affect us all, brother. How you doing?
Good. I just wanted to share a couple of thoughts. I think like very often we undermine that the future is really unpredictable, right? And in a way, we look at the past and we can explain it so easily and say, well, this event took place, therefore that will happen. reality is that shit just happens. The biggest variable here that I didn't hear you guys discuss was time. Time is a huge component. So people can have very, powerful views, display a lot of confidence in their views, but when it comes to the trade they're going to make and how they're going to make money on this trade, they're just going to get extremely overwhelmed with when things will happen, like when time will happen, and when the events that you think will happen. Very often, things just like we saw with Ukraine, for sure it's a big event, but that stuff been cooking for what, 30 years. I was born there on the border of Moldova-Ukraine border in 1980. Like since that time, for 42 years, things been cooking. I don't speak any other language but Russian, but I'm on the west side. I've been in Canada for over 20 years, and it's still the realities there didn't change that much. I mean, they always had some kind of conflict. When it comes to the gold and silver, I think the concept of time is really important. I mean, the best example to explain it, I think it's like from the movie, The Big Short, right? This whole like subprime mortgage crisis in 2008, and the Michael Burry example, where he like the entire thing with subprimes was happening in 2003, 2004. He did a lot of research in 2005, put on the trade, and guess what? For the next 2.5 years, he was sitting in his office waiting for something to happen. People started withdrawing money, a lot of stress. In the end, he didn't really capture like the biggest upside of the trade. But that's the thing about time, right? We just don't know. Sometimes things happen so fast, and you can see, and retrospectively, you can say, "Wow, that was so obvious." Very often, things take decades to cook, and that includes oil. And I come from a position that I've been holding, 5% of my portfolio in silver and gold. It didn't really do much in the past 3-4 years, right? So, and I'm a big like energy investor. That's kind of how I made most of my small fortune, if you will, in the past couple of years. But this gold thing didn't do much, and I think I'm still in the trade. I still believe, and that was mainly because of the entire kind of Bitcoin digital gold concept, where I had conviction maybe it's not digital gold. In some point, that was a big rationale behind Bitcoin going extremely high at certain periods of time, even though our memories, does not allow us to remember that anymore. But what happened at the point at which everybody realized that Bitcoin is no longer digital gold? Did gold respond to it in any way? So and then I question that. It's like, well, why is that so? Clearly it's not digital gold, so there should be premium to gold because it's not digital gold, because Bitcoin failed to be digital gold. So I guess what I'm trying to say is sometimes in life, things take time. Sometimes they take very little time. There's a certain component of luck involved, but we can have a certain view of the world, but the world is also it's a very dynamic, heterogeneous place where things just evolve and change, and one event could lead to another, and all of a sudden, like you see in the lithium space, for example, like China will be the biggest producer of, let's say, lithium or other like rare minerals for EV vehicles. And now it's like, well, how do you trade that longer term? Do you want to reward China? I mean, are you going to be in that situation where you depend on the vehicle, your entire infrastructure, to be depending on somewhere where you extract those metals, minerals, components? And so I truly think it's a dynamic world. I really feel the passion in the way you have in this conversation. I think it's very healthy. At the same time, guys, time will overwhelm. It took me 3, 4, 5 minutes to send my message across to you. Those spaces can take 5 hours. Sometimes those trades can last 5 years, 10 years, 15 years. You will have kids now. By the time you're done with this trade and you believe that something needs to change, and all countries will adapt and change their currency to what you believe is true, here 20 years has passed and now your life is almost over, because now you're looking into retirement, you want to play it safe, So in my very humble kind of view, we need to be very holistic about how things work, but also very tactical on what's real, and not really like, it's okay to have an amazing imagination, but it's also okay to be realistic about what's happening and kind of invest accordingly. So that's just my personal view. Thank you, guys.
Thanks for sharing, buddy. All very wise, and you're right about all of that. I agree with you. We were talking about time a bit before you had come on. Kind of in the intro, we talked about, these macro events take a lot longer than you think to play out. And I've been in gold and silver long enough, and have been studying our economy and the structure of our debt-based system for a long time. And people have been calling for the fall of the dollar much longer than that. And, one day, I suppose it probably will happen, but it does take a lot longer than we appreciate most of the time. And, they always find a way to expand the debt and kick the can one more time. And we should always be prepared that they will get away with it again. So in summary, I agree with you broadly. I think it was very well said.
No, exactly, man. And think about like the most obvious trade, like to a logical mind right now, is European gas, right? Because you're like, okay, the supply demand, they don't have any gas, they don't have energy, they're gonna freeze their ass this winter. Oh my God, need to put on a trade because you literally know it's gonna get cold. Well, now I'm sitting and I'm thinking, okay, well, if it's so obvious, do you really think those like brilliant minds in Europe will just sit and be like, okay, we're just gonna stay cold for this winter, but maybe next winter we're gonna be a little warmer, and maybe we're not gonna produce as many Audis as like last year. No, man, this is not reality, right? They will find some kind of solutions. They're bringing back coal plants back. I don't know, they'll burn wood. I have no idea what's gonna happen, but somehow there will be a unique solution to a problem that you think, no, the world must, see that there's no natural gas in Europe and everybody will be punished according. No, man, like it's a very fluid situation, right? Even though I am like balls deep into this oil and gas trade right now, especially European gas, because of the TTF. I mean, I'm still staying like extremely humble about like, hey, somebody will come up with some kind of solution, and there will be like some kind of energy pivot. I still don't know what it is, but we'll, looking forward to hear from you guys what this could be. But when it comes to gold, is silver. That's kind of the energy transition metal, right? Silver is the most conductive metal on Earth, so there will be a lot of demand going forward for silver for sure. So I'm very bullish on those metals, especially considering Bitcoin is like not. It's not a digital gold, thing anymore. So gold is just gold, and anyway, but yeah, I don't hear people talk about this angle anymore, which is weird to me.
Yeah, that was incredibly well said, Razor. Like, if every gold bug on the planet heard what you said prior to this, every single one of them would be infinitely more well off. Like, my thoughts on that is like you kind of have to like look at this sector in a few different ways, right? So like gold is not an investment. Gold is like an insurance policy. Gold is just money, in my opinion. That's just like you should not be expecting to make huge returns on gold like you would in natural gas, right? Like, you shouldn't expect it. When you go into the miners, yeah, like time is a huge deal in these silver miners. Like a lot of their margins with this recent sell-off are gone. Like I don't know, maybe these paper charades can last another decade. Maybe they can. If they do, a lot of these silver miners, especially the smaller ones, they're going bust and you lose it all, right? Or they get acquired by somebody for pennies in the dollar. But like I really think that this would not have been true 7 to 8 years ago. But if you look at the gold sector, you look at the big producers, look at their free cash flow and their balance sheets. A lot of these companies that have net cash positions, they're making 30% margins on each ounce of gold today. So they don't need some crazy event where gold goes to 3,000 to really take off. Yeah, they're not gonna give you a double and buy you a yacht, but like I really think a lot of these gold miners, Agnico Eagle, Barrick Gold, they're value stocks, and I think they'll do well even if gold doesn't take off. So I think there is a way to play this where time is not as big of a deal if you're just trying to like make money and you don't need to buy a yacht.
Yeah, I agree that not too many sectors cash flowing right now, and the companies you mentioned for sure they're doing extremely well. I think their cost of supply is like 750, 800. So at 1800 they're doing extremely well. So I agree with you. But people, most people they wouldn't look at the economics, right? They'll play the sector, right? And on Twitter from the macro dudes, you will always hear like, no, like sell everything, buy everything, puts on everything, treasuries. Like there's nobody talks like individual names, like economics, right? Deep dives into like the cash flows and the OPEX and stuff. So I totally agree. Lots of opportunities in that space. You know what I really like an interesting play as well. I played it in the past. Is that Royal Mint in Canada? We have like a Royal Mint coin, whatever. I mean, they kind of hold a lot of physical metal. I don't have a position right now. That's why I'm okay talking about this, not pumping anything. But they don't have really like an OPEX or spend. They just store stuff. And I personally find this play very interesting, right? Where you just have like a lot of like gold and silver in your vaults, and it's like physical, and then you can sell those coins that you can see in mail like like post offices, whatever, where you go and they sell you like silver coins, but then that coin is like sells for like 3 times what it's actually worth. So I mean, an interesting play there, I think.
Hey, Razor, while you're on, do you mind if I ask you a question? As you likely know and understand, oil and energy usage has a direct correlation to GDP. So can you kind of speak to recent demand numbers in the energy space, specifically oil? Canada, North America?
Yeah, for sure. And by the way, guys, we have Jenny in the room. Like, if you haven't heard, never heard her speak before about copper, metals, like gold stuff, she's the expert on that stuff. So if you want to bring Jenny many dots, you don't want to even listen to me talking oil, you want to listen to her. But I'll tell you right now, we're in a very tight market. We just came from the earnings season for oil and gas companies. Again, a lot of the thesis was kind of like, hey, drill baby drill, oil prices so high, everybody will get greedy, no more fear, let's go. No, those companies reported a lot of free cash flow, 20, 30%, doing extremely well. You saw in the Saudi Aramco earnings, they basically outperformed, like combined like Microsoft, Google, Apple, like some crazy numbers, right? They're just insane on the earnings. And basically free cash flowing, and a lot of attention now towards buying back shares. We see it basically on daily basis, companies buying back a lot of shares, using their free cash flow to buy back shares, reducing debt. We see debt-free companies right now in Canada, like debt-free, no more debt. Companies that actually almost died like 2 years ago, they're actually doing extremely well, no debt, and paying dividends, right? So a lot of opportunities. If you're like into divvies, you can like kind of invest in certain companies. If you're into buying back shares, that's fine. That I actually kind of like a little bit more the buybacks kind of strategy, but you don't see much growth, and that was kind of the argument. They're all going to grow. They're all going to get greedy. Well, it's not what you see. The Permian right now, the Permian is the biggest producing field in the United States. One of the biggest ones is like I think it's about 5.3 million barrels a day. During COVID, they were like at 4.6, 4.7, and now they're ramping up production 80,000 barrels a day on a monthly basis, right? So they will add additional 80,000. But then again, through inflation, those costs are also passed to service companies and drilling companies, because now you have to buy carbon steel, you have to pay more to people. We have a big crisis in the energy sector when it comes to workforce. Actually, they're closing the petroleum engineering programs. There's one in Calgary, University of Calgary, and they closed the petroleum engineering department. So all of those things that come into a situation, I think that we're heading towards some kind of energy crisis here, because if you consider that the world demand and supply is at roughly 101 or so million barrels a day, and on annual basis you require an increase of 1 million barrels a day on daily basis, if you look from an annual perspective, this suggests that to grow our world, our energy demand, you will need about 111, 112 million barrels a day in 10 years or so. And then the question is, where is it going to come from? And just to explain the scale of things, that's basically another Saudi Arabia, that's basically another Russia, that's basically roughly 2.8 times Canadian production. I mean, where is it coming from? And then you could say, well, energy transition, we're not going to need more oil. But now you have more people. You can't, you have like a energy transition using hydrogen, replacing like a plastic panel or tires in a Tesla. You can't barbecue propane a road, an asphalt road. You can't use butane for shingles on your roof. I mean, and those are hydrocarbon products. So if we assume in the future we'll need more shingles, which we will, where is it going to come from? If we need more cars, like mechanically, like plastic covers and all of those plastic components, and your phone that you're holding right now, it's made out of hydrocarbons. You can't like have a, like a lithium cover. I mean, maybe you can, maybe Chapman knows more about this, but it's just there are certain applications that you cannot replace from hydrocarbons. And so as we grow, as the population grow, assuming you're bullish on humanity, like unless we don't grow and just, would never have kids, or we don't expand, and in the developing countries, I'm not even going there. So I think like near term, you could see supply increase maybe 200,000 barrels here, 500,000 barrels there, maybe even a million barrels. But longer term, that capital expenditure, the capex, is not coming, right? It's not happening. So I think between 5 to 10 years, we're going to see some interesting development. And I think the companies right now that we have, those will become much more valuable companies, because today they trade at such low multiples. People think the sector is going away. But reality, without even having an opinion, reality suggests people still use hydrocarbons. And I'll finalize one thing. I said it before in another space, but I'll give you an example of like an Armageddon scenario, like the end of the world scenario, which just happened 2 years ago. The world literally shut down. Everything was closed. Me, my kids were at home for like 1 year, not flying, not traveling, not doing much, just locked down. We have a data point on oil demand during that time frame. That data point is 87 million barrels a day required by society to function. So we know the floor. We know that at normal situation today in 2022, we need 101 million. We know at the end of the world where people don't use any transportation, we need 87 million. So then question to you, are we as society going to those lockdowns? Is that kind of what the future looks like? We're not going to have children. We're not going to have more things. I mean, everybody in this room right now will want to have more vacations in the future, seeing the world, having, a better phone, maybe a nicer house, maybe a bigger house, a little bit more capital. And it's okay. It's okay. You deserve it. You work for it. It's okay to grow. But with that reality, we will need more of the things we currently use. Anyway, thank you guys. Thanks so much. I see Jenny here, so I'll shut up now.
And one question
Jenny.
if either of you could answer, I also had on that. So like, I'm just curious if you guys have like specific thoughts on assuming that we have to stop draining the SPR at some point. Like, what impact do you think that it would have on price in the near term? I get that's a crazy just throw a dart guessing game, probably to some extent. And two, like, how much has draining the SPR actually impacted new projects coming online and CapEx, if at all?
Yeah, I think it's a big deal because in the tight market, you have additional supply. And the question is what's going to happen when that additional supply is not coming? Then you kind of in that reality where you have in the hurricane season and now you have some situation or maybe increasing demand, right? And now you drain essentially more from your credit line, like you used to have a credit line. You don't have a job right now. You're using that money. And some point, you're going to have to pay it back, refill it. So yeah, it's a significant event. I think that's why oil right now is at 90. But consider this, like everybody trying to get oil down by like everybody, all governments. Basically, there's no issue with Democrats, Republicans now because Biden openly says, "I told them to drill, baby, drill. Just drill. Like give us oil." Like that's what he says openly, right? Everybody's saying, "Do this," right? And what do you see? You see a 90 WTI, right? So that's just reality. And I think it's going to be, it's an interesting point. Let's see what happens September, October timeframe, right? What the demand is going to look like. So, and another final note on the cost of supply. Many companies, their cost of supply is about $30, right? So those companies can do wonderfully well at 60 WTI. They survived. They're doing extremely well. And so there's this angle, though, is though if oil at 75 WTI or so, then oh my God, this is the end. Well, not the case because we're already at very low multiples relatively to 3, 4, 5 years ago. those companies are free cash flowing, paying down debt, so they're very delevered. But now, through the transition, right, through their ability to pay down debt, buy back shares, now you're actually able to sustain the cost of supply. And remember, we, like 2 years ago, we had minus 37. There was significant amount of PTSD. Many people think lots of people lost their jobs in 2020. That's not what I know. Most of the layoffs I've seen were in 2014, 2015, 2016, where there were like so many cabs on the Calgary downtown waiting for people, 700 people a day, like layoffs, like incredible stuff, right? And so towards 2020, those companies became so lean, like, and the hiring right now is not even that much because there's still some PTSD involved. So, there's one thing kind of having a view on the macro and what's going to happen, but another thing is kind of diving into the company and saying, wait, your cost of supply, including everything, is $30, and you're getting. If I was to tell you, you have a widget and it's going to cost you $30 to make it, but you're going to sell it for $60, are you going to do it? Are you going to freak out if that price is going to go down from 90 to 60? So, but that's the thing. Like, you have to know what you own, right? And you have to be committed to understanding what you own and just staying with it. Like Peter Lynch said, right? The hardest thing is like is not about your brain. It's about your stomach, right? Is if you can stomach those things, and you have to understand the economics of those businesses. Those are real businesses. They generate a lot of free cash flow over time. But people today, they want to make the quick buck, right? Like, go in for 2 weeks, make double, and if you don't, you get depressed and you go on the phone and you talk macro. Oh, what's going to happen? How we, that's not how life works. If you want to, be an investor, you have to choose to be an investor. If you want to be a trader, you have to say, okay, I'm a trader. I'm speculating, right? But in a way, we're all speculating, but this is more of a kind of educational, more responsible way of speculating, I guess. Guys, please talk to Jenny. She's amazing. Okay, I'll pass the mic to you guys.
Thank you, Razor. You're too kind. I'm sorry. I just walked in the door. I went to see Top Gun with my sons. So, sorry. I missed all
How
your...
was it? How was it, Jenny? You like
I
it?
thought it was great, actually. Better than I expected.
Awesome.
Yeah, it was really good. The boys.
So Jenny is amazing. She's specializing in copper, smaller plays, base metal, metals, right? So yeah. So any questions, guys? I don't think you understand who is in this room right now. So please use this opportunity.
I have endless copper questions, but
I have endless copper questions too. So let's go.
Well, hopefully I can help. One of the things I'll just comment on, just listening to Razor. I don't know how many people have talked about this, if you mentioned it before I came in, but the biggest bear argument that I often hear is growth in China slowing down. But I think one of the things that gets neglected is the growth in the ASEAN nations. So I've talked about that a couple of times, but I can post a tweet or two after if you want to look at a really good report I have. And I think when people hear the statistics about the growth there, they're quite shocked at how much that will contribute both to the energy sector and to metals as well. So maybe I'll do a little post on that because it's worth looking at for sure, this report that I have. But go ahead. Yeah.
That was more or less my question. I was going to ask, like copper, I think most people like get the long-term thesis, right? There's almost surely going to be a huge supply deficit at some point. But like Razor was saying, it's a true when question, though. Like, when is that going to occur? And just like with China, on one hand, that's an obvious cross current in one way, or like it seems to be an obvious cross current in one way. On the other hand, Green New Deal, Green New Dream type stuff is going to increase demand, and just general humanity, just lots of people that don't have internet access today or don't even have electricity today, just getting a fridge, going from a moped to a vehicle, all these things are going to make a huge difference. Like, has your opinion on the overall supply demand change shifted from the events of the last year? And also, as a follow-up question on that, are we actually sure that China's not going to respond to all these issues by building more bridges to nowhere? Everybody says China's going to collapse. I'm just like, they should, but who knows if you can kick this Ponzi down the road another 10 years by building 15 more ghost cities. Like, why not?
And that does seem like the plan. I know they're meeting in the fall here for their what is it, every 5 years they have not I shouldn't even comment because I don't really know enough about Chinese politics, but with the stimulus bill that I know they talk about passing here, if you want to call it that. I just want to find something, sorry, while I talk to you, because I don't want to talk. Like I said, I just walked in the door, so I'm thrown off by this. Give me 1 second.
So we have Nando joining us. So tell us a little bit about yourself. Just a little quick intro where you're coming from.
I'm across the pond, and I was just interested in some posts that Jenny had put up on vanadium. I don't understand much about it. I'd like to understand more about the application of vanadium, and and maybe some areas of exploration that around the world, and maybe some plays around vanadium. Sounds very interesting.
Sorry, I'm going to find that stat I was looking for. So, as far as vanadium, how much have you heard about it? Have you learned anything yet? Have you looked at my tweet, obviously, and saw that miners in Australia are pretty excited. So, I was telling Razor last night. I go by that cliche or the quote that Gretzky used to say of "I skate to where the puck is going, not where it's been." And so, two of my favorite plays are vanadium and manganese because I think they're largely under the radar. And if you're familiar at all with the mining sector, you've probably heard the name Robert Friedland. And he had the recent IPO for Ivanhoe Electric. And he's got a couple of different metals under there, but he has a vanadium company. And it's not public right now, but it's VRB Energy. And it's worth looking at vrbeenergy.com as well as what he has planned for Ivanhoe, because the VRB website gives you a good idea what the intentions are with vanadium batteries. So, in my opinion, a lot of people, say wind and solar will never work because of the intermittency, but vanadium, it largely solves that problem because they have vanadium redox flow batteries, VRFBs, that can provide large scale storage for the grid. So it's worth reading about that. And the play that I have been looking at is Energy Fuels, which is UUUU, because it covers uranium, rare earths, and also vanadium. So, and then another one worth looking at is Largo, but it's still early stages for me. The more I've read about it and the opportunities there, I think are enormous. And so if you can get in on the early stages, but definitely look at what Robert Friedland is doing with it, because my theory with mining, there's so much corruption in that sector. If you're not really familiar with it, it's just a completely different ballgame. And so I like to follow names that I can trust, and there's only a handful of them. And I like to play the junior miners probably too much, but to be honest, I have a database that I keep, and I probably have less than 1 page of names that I would buy of geologists and CEOs, versus I have at least a dozen pages of people I will not touch. So you just have to be really careful. But Robert Friedland, of course, and Pierre Lassonde are two of my favorites. And so if you look at, like I was saying, the VRB Energy website and Ivanhoe Electric, it'll give you a really good idea of what he's done. And I've written about vanadium on Common Stock a couple times, so I'll maybe repost my vanadium article, and then it can give you some of the statistics as to where it's going.
I'd like to ask a question about energy, if I may, a question I feel would help me really understand not only the timeline, but the criticality of the situation. So Jenny or Razor, Jenny, if I were to make you president right now and you were to implement everything you thought in your heart and mind it would take to get things on the right track and correct the situation, then how long would it take to get that done? I mean, are we waiting on permits, or do we need more exploration? Do we know where the assets are right now? Is there enough in the Gulf? Is it shale? I mean, what are we looking at if we made the right decision today to get this extra 10% or just to stay flat?
I want to pass that question off to Razor. He's better at energy than I am.
Thanks, Razor. I appreciate you taking the time one more time.
Yeah, I think by far, like the biggest issue we have is takeaway capacity. So pipelines, essentially. Why is that a problem? Because you can produce, let's say, 100,000 barrels a day, but if you can't ship the, if you can't ship the 100,000, you're going to produce whatever you can, right? So we have a situation right now, and actually we had you guys know EQT is the biggest natural gas company in the United States. So we had a space with Rice brothers, Toby Rice and his brother, and they basically explained the issue, and they said, look, we can like double our production like in the next couple of years if we wanted to, but we just can't ship our product. So that's the United States. On the Canadian side, I mean, you know about the Keystone XL pipeline. Biden like really doesn't like the idea, but that could have brought significant production back. And I think the one issue people don't understand about this energy crisis that we're heading towards is that many of the super majors, especially, and I know this because I work in that field, like literally as we speak, I'm employed by one of the super majors working on this project. Many of them are developing technologies to cut emissions, right? There's their goals to cut ambitions to cut emissions by 50% by 2030 and net zero by 2050. Thermodynamically, it's very challenging to do, but I think there's line of sight towards cutting emissions by 50% towards 2030. And so think about the world where hydrocarbons are getting produced and being utilized with 70% less emissions, and then you can scale the opportunity through the infrastructures. The problem is that we don't have, we just don't have pipelines. We don't have access to, in Canada, we don't have access to water. Our main issue is that our main, customer is their only customer, which is the United States. And that's kind of where it's at. And the other thing we provide is the heavy oil, which only exists, I mean, the heaviest stuff you guys have in the United States is in California, but there's not too much production of that oil there. So we provide the heavy stuff. So if you think about the heavy, those will be the diesels, the jet fuels, right? Like all the, the asphalt for the roads, like all the heavy stuff, right? So, and I think the biggest issue probably is how do you, not even how do you produce, not how do you produce in a sustainable way over time, is how do you ship this product to markets, right? So that's why I'm somewhat excited about LNG Canada and our ability to transport more natural gas across the oceans. But yeah, that's going to be a big play in this decade, I think.
Sorry, I had a question for Razor on the not so much about the natural gas, but the oil. You see the pipeline takeaway capacity probably a constraint. What about the? Do you see it on the refinery end? Like, seems like refineries are a capacity, or and maybe now they're gonna switch over to winter oil, and is that gonna cause a backup in processing? What are you thinking there? Do you see an issue?
I don't. I think from refining, what we learned is that they're limited by what they can produce, right? I mean, there's clearly a volumetric issue over time, which is kind of awesome because now we can know like what the actual supply demand and what the actual products that have been delivered to markets. Yeah, we will need probably to refine more products as we go, but I don't think there've been like a refinery built in U.S. since like the late 70s or something. So, and then through the recent Cenovus acquisition in Toledo, like the 50% stake, you can tell like some companies are really, really interested in kind of scaling their refining capabilities and integrate a little bit more. But yeah, I think like, we will need those infrastructures, and that's kind of, it goes back to my previous comment, is that right now there is no mandate to build anything new, and so we have to work with what we have here, right? So we will see what happens in the U.S. in next next election cycle, and kind of see how they position themselves, because clearly energy is getting weaponized here, right? So so it's going to be an interesting development, maybe opportunities for investments, right, in that space. But we've been deprived of pipelines, refining, capacity. But I don't see any issue right now that we have. The only issue we could have is there's like hurricane season right now. So if a refinery goes down, I mean, what's going to happen? It's such a tight market from all sides, what are you going to do? So price will move, right? Thank you.
Right. Okay. I don't have
So-
another question, but I'll wait.
Is some of the Russian oil still making its way to the West by being filtered through other countries first? I had seen some speculation about this going through India. Is this valid?
So it is my understanding, based on listening to Dr. Anas, he comes to our spaces as well, and I have no idea if it's true. I assume it's true that the Russian market, the Russian oil is on the waters. It's being transported at a discounted rate and refined in India and China and places like that. So, but I don't have like any knowledge or insights to this. Mostly, I think you guys all heard Dr. Anas speak about that, and yeah, like this whole like U.S. ruble kind of relationship, right? Considering where the Dixie is at, is kind of fascinating. I don't know if you guys talked about this already.
Go ahead.
Also heard some rumors online about U.S. possibly continue or even expanding the SPR release, another 200 million barrels. Do you see that as a possibility, Razor?
I think so. What do you think? I mean, like if the SPR release ends and the oil price goes back to 100, what are you gonna do? Or 110 or 120? Right?
Yeah,
What are their options?
especially before the elections, midterms. I think they will.
At the current rate, when will the SPR run dry? Isn't it the end of the year?
Right now,
We have
I think it's targeted. I think there's a date in October as the. I think they said a certain number of days at 1 million a day, but they still have like enough oil, so they say, whether it's usable or not, because it's pretty old. I believe it was another 400 million that they could release. So they probably hold this for a while, but do they want to get to that level?
I'm gonna post something in the nest. To give you some more insights, kind of on what's up.
This feels like a really big deal. I mean, October, it's 6 weeks away. Middle of the month, 8 weeks. I mean, this is right around the corner. It seems like a pretty big deal.
Yeah, guys. So I shared something in the nest, and I think it gives you kind of good insights, because it's not just the SPR, is the basically the US big four storage, right? So the crude SPR, gasoline, distillates, and jet fuel. So all of those things, right? So if you look on the trend, look at the yellow line. So this is basically 2021, right? So so the draining happened, and look at the slope for the green line. This is 2022 and where we're heading, and look at the historicals, right? So the 2020, 2019 levels, right? 2018. So basically plateaued and sloping downwards. And that's why I think oil price increased recently to, it was like at 86 or 87. And then it basically went back to 90, 92 or something like that. There was a couple of days. and it's because of that last data point on the green line where basically there was a lot of consumption of gasoline, right? So I think you saw like a 7 million barrels withdraw or something like that. So yeah, fascinating chart just to see on relative basis what's going on.
Yeah, great. Any news on the shipping? I heard the tanker rates are going up, and I'm wondering if it's a conversation that Shubham brought up a few days ago about Russia tying up some of the tankers for offshore storage. If tanker rates, if all of a sudden they lock up a bunch of tanker rates, then you may impact the supply else in the world. Maybe it's a time to go long tankers.
Yeah, I think so. I'm not in a position to answer that, but I think we have Eleni here and Bruce. I think they attended that space as well, or maybe Jenny can remember, but I'll let somebody else answer that one.
Okay, to shift this conversation back to copper real quick. Jenny, I've got a question for you. It's going to be a real interesting question, but just for an exercise for my own edification. I'd like to know just a safe bet in copper. Like, give me the Cameco of copper, basically. And I want another one that is like got a lot of upside, but nobody's seeing it. I don't want to know what nobody's seeing though. I want to try to find out for myself. So if you could do that, I know this is like a strange question, but this will send me down a path that maybe I can go I can try to learn about this myself a little bit and like be a little bit unbiased, I guess, or try to remove the bias essentially in the analysis. So that's the goal here.
Okay, so it's interesting because somebody had asked me to do a little bit of a comparison of 3 different producers, and I spent the morning doing that. And I came across one of the ones they had asked was First Quantum, and I actually got pretty excited looking at it because I'd never looked at it before. So that's one I would definitely recommend. It's got a pretty nice dividend too. And tech, I'm pretty big on tech because QB2 is coming online either later this year or early next year, and it's looking to double their copper production. And so tech is definitely worth looking at. And then when you say you want one with significant upside, are you referring to a junior miner? Because
it could be like an upside. They've got a deposit, let's say, and I'm wondering if like it's something that's like not everybody's seeing it yet, and it's not really like apparent as to what their upside is. It's just it's an interesting exercise just for my own edification. If I could just like go in and see what's going on.
Yeah, there's a lot of time on his hands also.
Yeah, well, you know what? Thank you, Alex. But that's true. Yeah, I do have some time on my hands.
Well, if you can stomach the risk in Chile, then my 2 favorites there that I feel have a lot of potential are ATEX Resources. It's ATX.V, and Atacama Copper, which is ACOP, ACOP.V.
ACOP. Okay.
Yeah, Chile feels very risky right now. A lot of gold and silver mines are getting denied permitting.
Huh.
It does. I also did a little post on that earlier this week on Common Stock because people say that, and yes, there's definitely risk, but September 4th is a very important date. I don't know if you've been following the developments there about changes to their constitution and mining royalties, but they're having a vote on that on September 4th. And right now, Boric is doing terrible in the polls, and his changes are as well. So the approval ratings have declined significantly. So the odds are that probably will not pass. I don't think, from what I can tell, that Chile is like Peru, where I think he'll end up serving his full term. But he's been blocked a couple of times by Congress on certain things. So I just was looking at that, and then I compared a number of incidents we've had in Canada. And to be honest, with the ESG movement, I I see Canada and the United States as almost equally risky in some ways. There's an article I posted the other day about the sage grouse preventing oil and gas development, and then a pipeline was stopped for a woodpecker's nest, and then there was a metal in Minnesota that was a nickel mine, and they stopped that as well. And there's been lithium protests in Nevada that they've denied permits. Just there's so much risk in North America that the article I wrote about it basically said, personally, I think there's so much risk that it's unpredictable anywhere. It's more about sizing your position accordingly. So that's my view on it. I just, if people say Chile is such a big risk, the other quote I like from somebody in the mining community was, politicians come and go, but the rocks will always be there.
That's a really good point. I'm glad you said that. I think we saw kind of a view of how risk could change during the COVID lockdowns in some of the Western countries. A lot of places completely stopped working, where some of the third world countries kept on trucking, right? And so that kind of changed my view about that a lot too. One more question for you related to copper. Do you have any opinion on Oroco?
I was actually about to ask that question. Sorry.
That is not one that I would buy, and I don't want to comment too much publicly on it. So if you want to DM me, I'm happy to go over that one with you.
Okay, it's just us.
Yeah, no. Generally, if I have something kind of negative to say, I'd rather not say it at all publicly. So, like I said, if you want to DM me, I am good with that.
I can appreciate that. Thank you.
How about Three Valleys Copper in Chile?
Please do not touch that one.
Yeah, I wouldn't actually, but it was there's a guy in uranium who in April of 2021 he must have put like 100 tweets out, and he's a fairly known little personality in the uranium space on Twitter, and I think he put out it must have been 100 or 200 tweets about establishing a very sizable position. He's quite the influencer, and that stock proceeded to go from like 82 cents a week, possibly at most 2 weeks after he had suggested it, and I think it's down to like 3 cents.
Yes.
Maybe 2, 3, or 4 cents, and it went in a straight line down. And I don't particularly care.
Okay,
for him.
I think I'm all in, guys. I think
yeah.
I think I'm just gonna.
I
think this is the play. I think this is it.
Yeah,
Thank you,
I was
guys.
shocked
Thank
because
you. Thank you, guys. Thank you.
I know exactly, Three Valleys.
I know exactly what you're talking about. I know that stock, and I know who is talking about it.
Yeah.
Yeah. Not recommended.
Thank you.
You're welcome.
Hey, I have a question about do you focus much on the refining space or just the actual copper mining space?
Just copper. Well, so I like a lot of base metals, but I don't really do. I mostly do small caps and micro caps, not refiners.
Okay, gotcha. Maybe it's like more high level anecdotally, or maybe even like point me in the direction of anybody that kind of does this research. Like one thing I'm really interested in long term is just like U.S. domestic refining. One, because I think it's like with deglobalization, I think just like vertically integrated supply chains are going to start mattering more and more. I think like U.S. Canada, we're probably going to have cheaper energy than a lot of places where this work is being done today, like Chile, China, etc. Do you happen to know, like, can like U.S. Steel, like, how feasible it is for them to get into like the copper refining business? Do you have any idea?
No, I don't. I'm sorry.
That company is so cheap. I just want a reason to buy it. Anyways, thank you.
Something we've been trying to work out amongst ourselves here, both in the gold and silver and uranium space, is the increasing costs, whether it's the price of debt or inflation in energy, and how it's going to impact us, especially some of these juniors getting online, especially those who haven't developed yet. Do you see a lot of risk for some of these juniors having issues, coming online and doing it affordably, right? Share dilution.
Again, I would probably answer that by staying with the reputable names, because there's actually only a limited number of teams right now that have a history of bringing projects into production. And so if you're looking at the junior sector for something with a growth potential like that, it really would just depend on who's backing it more than anything, in my opinion.
Can we talk a little bit about the grade, the decline over time of grade in copper, and the significance of it? Because I understand it, but I've never actually heard anyone talk about it, just how big of a deal it really is. Because a lot of times you get narrative, people say, you just don't understand, the grade's terrible now, you just don't understand, and it ends up being a lot of noise and hype. How much of that is fundamentally a big deal? How much of it is noise? I mean, I want to know, what's the truth behind the sector and the grades out there, and how many resources out there are still very high grade? Are there any, or have we already rolled over and now we're kind of picking up the quarters or the pennies and nickels and stuff?
Actually, one of the stocks that when I was saying, somebody had asked me to do the comparison, one of the ones I looked at was Copper Mountain Mining. And if you were to have a look at how their financials have been set up the last year or two in relation to what the declining head grades have done to their production and profit margin, honestly, it's pretty clear. But I think the best thing for you to do, if you want to familiarize yourself with it, is to read. Have you read the Go Rosen, The Problems with Copper Supply report? It's a free download from the Go Rosen blog.
No, I haven't, but thank you for that reference. I'll go check it out.
I'll post it, because if you're interested in the copper space, that's what actually got me started very bullish on it when I read that report. I think it was earlier last year, but definitely that explains everything in depth about declining head grades and the other problems behind copper supply, resource depletion, water constraints, everything like that.
Okay, gotta ask. Resolution Copper. All right, just in that vein of like, okay, you talk about like risk, like, oh right, well, you go down to Chile. Well, we can't even get this. Apparently, I don't know. Maybe you can tell me whether it's an amazing deposit or not online. Is Resolution Copper, is that actually going to happen potentially anytime soon? What effect would you see that happening on the market if it did actually somehow by some miracle come online, assuming it's any good?
I will be totally honest with you. I have not heard of that one. I'm just pulling it up now when you mentioned it.
Yeah, the BHP Rio Tinto joint development in Arizona.
Oh, yeah. See, I don't generally look at the majors like that. So
I see. Okay, I got it. Yeah.
Sorry, I haven't seen that one mentioned, but I can look at it and send you a message.
Yeah.
Jenny, can I just ask, do you have any opinion at all? And this is not copper related, and maybe there is copper in Colombia, but do you have any opinion at all about the mining or extraction industry's fate in Colombia with the recent change in government? Are you aware of that? Any thoughts?
That probably is a jurisdiction that I would avoid right now. It's still early days there to see how much it actually plays out, but it would definitely be one that would be lower on my list. I don't think I'd be investing there right now.
I mean, the guy's like a former FARC militant, so it's like the communist rebels in Colombia.
Yeah, the problem is that there's a small gold producer there that is profitable, and they are, rapidly increasing, by tens of thousands of ounces their production, and it just went from the jewel in my eye to what just happened down there. So it's, I was kind of hoping for something positive, but it is what it is. Thanks, Jenny.
Sorry about that. If you want to give me the name or DM me, I can have a look. But yeah, that's definitely not one I would feel comfortable touching until you see how it plays out.
Yeah, Soma Gold, and they self-fund all their exploration from their own internally, and they have a very realistic. They're making good on, going from they've gone from like 16,000, 24,000, and now up to 36,000 ounces. I guess per year. It's per year. So, and they have a ton of like artisanal workings that they're working with all these artisanal folks to refine their stuff. And there's it was the everything about that one company checks off a lot of boxes for me, including insider ownership and just actual profitability and small size. It must be like a $20 million company, and they're just cranking out money. But the problem is that the government just went to shit.
You said how's it spelled? SOMA or SUMA?
Yep, Soma Gold Corporation.
Okay.
So Jenny, you track and invest in gold and silver as well?
I do, but to a much lesser extent. I'm not really the precious metals trade has just been very painful this past year, and I think a lot of people had high hopes for gold for a number of reasons, and it's just been extremely disappointing. So I haven't touched it a whole lot. I prefer the base metals. But the other thing I'll mention too that I've posted about before is if there's a lot of people out there that are very bearish, obviously. One of the things that I really appreciate is another thing that came from the Go Rosen blog is they showed how over time since the Great Depression, a portfolio that's consistently outperformed is 25% in precious metals, 25% in agriculture, 25% in energy, and then 25% in like metals and mining. So I've tried to structure my portfolio accordingly. I was a little light on agriculture, so I did want to add some precious metals recently, and I like VZLA, VZLA for silver. But yeah, generally I'm not really into the gold trade too much.
I just want to say that buying agriculture is the most difficult thing on the planet. I'm currently trying to do it again with a couple buddies. I live in Iowa, so prime location for it. Incredible investment, but so freaking hard. I've gotten that same advice trying to do it. It's so tough.
I totally agree, and then actually that was kind of why I was light on it for a while. Plus, they were pretty. They went sky high after the war, and so I was just waiting until they came off a little bit, and because obviously Nutrien and Mosaic are two quality ones, but yeah, they just were at 52-week or all-time high. So the one I picked up this week that I felt was worth looking at is LXU, because one of the things I liked about it is that they have ammonium nitrate, and that's for mining explosives, because the demand growth in that area is going to be excellent the next 5 years or so with all the new mines that will be developed for all these metals. So I like LXU, but then I wanted phosphate as well. So I picked up some moss. Mosaic's a pretty good one too.
Oh, I'm sorry. I thought we were talking like cornfield, so I was way off on that one. My bad.
Oh, no, sorry. That, I owned the ETF wheat, and I did pretty well on that because it spiked initially too. But they're pretty tricky. I found out that the ETFs in that sector. I don't know if you've tried those at all, but they have some different regulations, I guess, than some of the other ones. So I don't know if I'd feel comfortable talking to those.
So speaking of phosphate, I track a company, Arianne Phosphate. Are you familiar with them?
I am not. Can you tell me more about it?
They're a Canadian-based company. It's a very pure play, and it's my understanding that when you get the grade on phosphate, it's less about the quantity and it's more about the purity. So they're somewhere around 25%, which to my understanding is very high.
you mind giving me the symbol for that one? I want to look at that one too.
Yes, so I've got the over-the-counter that's Delta. Let's see, hold on, let's see what it is. DRRSF. It's Arianne Phosphate.
Thank you. I'll have a look at that, and maybe we'll chat later tonight via DM, or I'll send you some information, because I do have a little bit of good information I got from somebody regarding phosphate, but I'm just not familiar with the company.
Yeah, no worries. One more question for a potential rare earth play. You're in a little bit in the rare earth, right?
Not so much. That is
okay.
I looked at Vital Metals was actually, if you're looking at
that's the one.
Oh yes, I like that one actually. That was one I have had on my watch list for some time, and I quite like it.
I do too. Another Canadian company, and they got the infrastructure already set up. They've got a big deal with a country over there, and I think it's Britain. So they're kind of already on the way. They seem very undervalued to me, but I track them often, and I'm pretty excited about them. I'm looking to add more if we can get around 3 cents here, maybe 4 cents.
I haven't looked at it in about a month or so, but yeah, it was on my watch list for some time, and I should pick it up again. Honestly, I'm worse than a woman in a shoe store. Like, for me, I'm just addicted to buying stocks. I don't know everything on the periodic table if I could. So that was one of the reasons I kind of like that UUUU Energy Fuels, because it had rare earths, and it had the vanadium and uranium. So you're kind of covered there with a decent producer. But I should look at Vital again, because they were impressive.
Are there any other base metals that you think like have promising 3 to 5 year outlooks that we haven't mentioned, like aluminum, anything like that?
I haven't really looked at aluminum, but I was mentioning earlier about manganese. So Elon Musk and Volkswagen have both talked about manganese being the next best thing in the search for the ideal battery for EVs. So definitely worth looking into that. There's not actually a whole lot of stocks, companies that you can buy that have manganese, because I think 84% or something like that comes from China. They've really got that one cornered. So there's not a lot, but the one that I own is on the NEO exchange. And I don't know if you've ever bought on that exchange, but the swings are just like nauseating. It can be down 20% in the morning and up 20% by the end of the day. So I'm kind of disappointed in the action, but it's funny because when I found this company and I was quite impressed with it, Sprott released a report shortly thereafter on it, which I can also send you if you want to fire me off a DM. But I really think that manganese is worth looking at, because if they are able, well, so far it's increasing. It seems that they're making more batteries with a higher manganese content, and that allows them to reduce the nickel and perhaps even eliminate cobalt in the batteries. And cobalt, there's human rights issues with it, but it's also very expensive and rare, and nickel is very expensive as well. So it makes for a much cheaper battery. So there's significant growth, I think, in the manganese sector.
Interesting. And yeah, you're talking to a group of uranium and silver people, so that volatility is not going to scare us on that one. We're unfortunately used to it. Nickel's interesting. Like Valet, or what do you recommend in nickel?
Yep, I own Delay. I like them as well. That one's been tough because, like I said, I really like my junior mining stocks. So finding one has been hard. I actually I owned NAN, which was halted forever, and now they did a reverse takeover with Premium Nickel Resources, and it just started trading again this week. And it's actually, from what most people are anticipating their upcoming results will be, it's actually fairly cheap right now. I forget the new ticker. I think it's PNRL.V, but that would definitely be worth looking at. And the one I own as well, if you want a junior miner, and when I talk about junior miners, please know I never put like more than 1% to 2% into these guys, because they can tank overnight, and it really doesn't take much. So I never put in more than I can afford to lose. But that's another one that I had come across, SPC nickel. It's spc.v, and I really liked it. And then I came across Couloir Capital released a report. Again, I can send that to anybody who's interested. Just send me a DM. But I was looking at all the analysis that they had on their website, and I was shocked that SPC nickel, they had over a 400% upside target for it. And there were other companies I was familiar with on there, and by far that was the one with the most upside potential. So I like SPC nickel. I think that's worth looking at, but it would be a very long-term hold, because I think what they're looking to do is they have a number of properties that are promising in the Ring of Fire, but they also have a property, it's called muskox, and that one, if it's what I'm hoping it is in the next couple of years, what they're rumored to be doing is they're going to develop to some extent these ones in the Ring of Fire and sell it, and then head off to muskox and do some exploration there. And it looks like it could be a Voisey Bay type of play, but it would definitely be long term, and again, very, very high risk. But like I said, if anybody wants that Couloir Capital report about the 400+% upside, I'm happy to send it.
I would love it.
Jenny, can you just remind us, what was the, other than Mosaic, your was it LXU?
Yes, LXU.
That's the ticker?
Yes.
Okay, and that's not the name of the company.
No, I just want to
like LSB.
Yes, it's LSB.
Okay, thanks.
Yeah, you're welcome.
Go ahead,
Jenny, I wanted
Puppeteer.
to ask about like what does the exploration look like for the nickel companies, and what I mean concretely by this is like, you know, I feel like, you know, you're probably very familiar with like the copper porphyries, right? And I think the exploration cost on those are like fairly low, right? But because you're basically hitting all these different layers. Like if you look at the Filo del Sol, right? Like you go through 1,000 meters of the copper, right? Versus like, but I'm not really sure how this works for nickel. Is it more like VMS or like what do you look for?
You know what? That's beyond my scope. I'm sorry, I can't really answer that. I would assume it's somewhat similar, but what I'm finding, a lot of the ones that I have looked at are previous producing mines, and so like the SPC nickel, there was a lot of these in the Ring of Fire area. That's kind of what I've looked at, is the historical grades. So I'm mostly familiar with copper. That's my preferred space, and a little bit with manganese and vanadium. But you know, nickel's a tough one, because there's the two different types as well. There's nickel sulfide and laterite, and so the nickel sulfide is the battery grade, but there's also demand growth in the laterite as well, which is stainless steel. So if you're looking for a play, there's another one you could look at, is Horizonte. Don't know if you've heard of that one, but they have both, and they're actually heading into production here with their nickel laterite one, and then next year I think they're going to focus more on the sulfide. But even some of the reputable accounts on Twitter that I've spoken to that have pretty significant knowledge in the nickel sector, they will tell you it's really, really hard to find a quality sulfide play in the junior mining space even. So I'm sorry, I can't really tell you. I can't speak as to the grades and how they look for that versus, but that's a good question and something I should be researching myself. Thank you.
It's kind of interesting, like the nickel, because I think it even if like the lithium iron phosphate batteries kind of dominate, I think for now, I mean, it's open question like 10 years from now, like you're still going to need these premium batteries for like whatever cars in, you know, the United States or in Europe, like because the lithium iron phosphate like batteries, like my perception is that it's not as long range, right? So they're definitely going to need at least some nickel. So
that is true, and that's another reason, if I go back to the manganese, at least it cuts down on the nickel. But you're exactly right. It's just nickel is in such short supply, and like I said, such the lack of quality deposits. That's the sector I've really had the hardest time finding plays that I like.
What about thoughts on DRC in Africa, and potentially if you have any knowledge of a copper play there called Critical Metals, CRTM, on the London Exchange?
I don't know of Critical Metals. I do own Ivanhoe, which is a fantastic one, and I have a good friend that introduced me to Ivanhoe, and when I do my little copper talk on Tuesday evening, I've asked him to come and speak to Ivanhoe because he knows it inside and out. So, if you're referring to the risk there, personally, again, I just go back to position sizing because a lot of the people I've talked to as well in the mining sector have said their biggest returns have come from what's known as a risky jurisdiction, because a lot of times people won't touch these plays. So I own Alphamin. You've probably heard of that one, tin stock in the DRC. And I'm fortunate enough that I have a small group of friends that I have a chat group with, and all of us own Alphamin, and we keep pretty updated on violence that's near the mine or anything that could affect it there. So I think one of the things that you could see happen in the DRC is that China has really burned some bridges with the government, and they've made a lot of promises that they haven't kept, and they're I think they pretty much burned their bridges, that if the government there is looking to cut them off, and there's a number, I think it's AZM, there was a lithium miner there that had some issues, but it's gotten to the point from what I've seen that I don't think they're going to be too eager to work with the Chinese anymore. And so it's positive for North Americans that are looking to do business there. So Ivanhoe is worth looking at for sure.
Is that the AVZ Monono project, or?
I looked at it briefly, and that's about the time I think they had a halt due to the issues there. I just want to look to make sure I'm not going to be, I thought it was AZM or something like that, but yeah, it's the lithium miner, because you've probably seen, if you have followed my account at all, you've seen me talk about Patriot battery metals for the lithium play. So there were rumors that was a similar deposit, which is why I was looking at it. But yeah, they've just had so many issues with the Chinese and in Africa that I really can see that they're going to want to do less business with them and maybe focus more with North American companies.
Well, unless anybody has any other questions, we'll start to close this thing off. We're kind of running long in the tooth on our end here. We got some, me personally, I'm getting pretty tired. Jenny, I will have one question for you before we go, if you don't mind. What's your outlook on the next catalyst to kick off the next run in base metals? Do you think it's more of fiscal policy, something like ESG bill, something like that, infrastructure, or do you think it's going to come down to just the fundamentals, underinvestment, and the lack of supply is going to force the issue?
I think you basically just covered everything there. The Biden bill with $430 billion. There's so many things in there that would act as a catalyst. And what I like about it is that it's basically set up as a 10-year support for all of these investments. So, people were wondering, well, is ESG going to disappear? I'm skeptical about solar panels and things like that. This covers a lot of tax credits for the next 10 years. And so it gives people a lot of reliability now to invest in base metals that are required for this transition. So I think basically the catalyst has happened. And it all really depends on your views on recession, in my opinion, because that's still, we're pretty much on the fence. I really haven't seen anyone come to a consensus yet as to whether or not we're in one. The other thing to consider is, I should post this statistic too, but there was a really good article in Forbes a little while ago about how stocks, about a year before the recession, they actually usually bottom. close to a year before. So I even if there was a recession, personally, I'm watching, and I think copper seems to have generally bottomed, and the fundamentals are definitely in place, like you were saying, with the head grades declining, resource depletion, all of that. And so combine that with the upcoming demand here with the energy transition, and I think we're there. I really think that, we probably have hit the bottom. That's just my personal opinion. I could be totally wrong, but from everything I'm seeing, I really think the demand growth is there, and the mining sector has really just tanked all the metals the last since June, the end of June. It was the lowest since 2008 on the mining index. So I think we're there personally.
Yeah, I agree with you. It feels like a very strong opportunity here for a super cycle, kind of a bull run. And the only thing that really scares me about it is that, in my view, it seems so obvious. It's like the fundamentals are so obvious that it makes it such a simple play to me. But otherwise, I'm very excited about it, generally speaking. And it does seem all in place, and it does feel very oversold. Just fundamentally, structurally, and even on the technical charts, you can see where we are, and the historical analogs, like you had alluded to. It's pretty exciting. It feels like a once in a lifetime kind of shot in metals broadly, commodities. But
that's I always talk about Go Rosen's website. I call them the crystal ball for commodities, but they have a post. The commodity super cycle has just begun, and that's another one that's worth your time. And I think that's the one that covered that 25% breakdown that I talked about. So definitely, I can post the links. I think I just put one up. But if you're interested, visit the Go Rosen website and have a look at both the problems with copper supply report that they did last year, and then the more recent one about the commodity super cycle has just begun, because it's really, they're wonderful.
I appreciate that reference. I'm absolutely going to go check that out. Anybody else have anything else to say who's currently up? Anybody want to raise your hand who's not up yet? It's kind of a last call here.
What is the most undervalued space sector play in, anywhere? What I mean, I think that with the everything bubble, everything got expensive. And on a relative basis, I'm curious if anybody, or specifically Jenny, had a thought on what the single most undervalued space or sector would be.
Personally, I would say vanadium. I think that one has the most upside potential. I really don't think it's on people's radars yet. And like I was saying, if you look at VRB Energy from Robert Friedland, and what he's been saying, I think they said back in 2017, he spoke at a conference, and they said he was basically in a vanadium induced, it was similar to a high on ecstasy. They said he was just talking about the potential for vanadium. And so he's been on it for some time, but a lot of the people I've talked to, they haven't really heard of it. So I just think there's massive potential there in terms of the large scale storage for the renewable sector.
Well, that's interesting because it's often found with uranium.
Exactly.
Well, to everyone who come up to speak, we really appreciate your time. Jenny, it was very nice to meet you, and look forward to checking into all of the references that you were so kind to give us. It's a lot of good stuff in there, and you're welcome back anytime. We do it every Saturday night. And so with that, thank you everyone for coming in. It was a lot of fun tonight.
Thank you for having me. And, I'm not very good off the cuff like this, but anytime somebody has a question, I'm always open to DMs, and I can usually find a good answer that way.
Well, really appreciate that. Go ahead.
Oh, no, I was going to say thank you for taking the time. It was super interesting and helpful information.
That's great. Thank you. Yeah, don't hesitate to send me a message if you ever have a question. Thank you.
All right. With that, everyone enjoy the rest of your weekend. Until next time.
Good night.